Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live for a special day in studio. We'll get to that special guest in just a second. We'll start it off with our senior economist joining us, Tracy Shuchart, otherwise known as Shy Girl. Good morning, Shy.
Good morning, all.
And of course, we've got the one and only Fabio here from Europe, coming in, spending the evening with us last night in Naples, Florida, and now in studio today from Mentor Q. Fabio, how are you?
Very good. Thank you for having me, Anthony. It was great to see you last night and excited for today.
Yeah, I'm real excited about it. We're going to talk about, is it the GEX levels, the JAX levels? I got Jimmy calling it JAX. Some people are like, what's a JAX level? And I'm like, I call it a GEX level. But we're going to get into that in just a second. I know it depends on whether or not you're American or European.
Absolutely.
Yeah. So we'll start off with the news like we always do. Shy, anything exciting happening overnight?
So exciting. Well, if you remember on May 30th, Trump did announce he's doubling those 25% tariffs on steel and aluminum to 50%. He did sign the EO yesterday. Those go into effect today. Trading partners are not exactly thrilled about this, and it kind of coincides with today is the final day to make best offers to avoid more import levies taking effect in early July. So everybody's supposed to have their offer to the United States today. Mostly the steel and we import about a quarter of all our steel and aluminum. So obviously this will hit the U.S. hard, and our biggest trading partners are Canada and Mexico. So they're working behind the scenes to kind of see what they can do to mitigate this. So we'll see what happens, but those do go into effect today. We also have the Beige Book out today at 2 p.m. A lot of people don't really talk about it. It's a report that's published 8 times a year from the Federal Reserve, and it kind of is a summary of the economic conditions across the 12 Federal Reserve districts. It covers consumer spending, employment and wages, manufacturing, real estate, banking and finance, and prices and inflation. And it matters because while it doesn't set policy, the Beige Book does help guide the Fed's understanding of the economy in the real time, and markets watch for it for clues on inflation pressures, labor market tightness, regional disparities, and what the Fed may or may not do as far as rates are concerned. Then we also had Trump at 2:17 a.m. did start tweeting about President Xi from China, and said it's extremely hard to make a deal with. It's making all the headlines this morning. So, we know that the U.S. and China are still at odds on a number of issues. So we'll find out if that helps or hurts that relationship a little bit more. In addition, what's also interesting, we have the MSCI, which is the Morgan Stanley Capital International All-Country World Index, rises to top the February record high, which is kind of a barometer of global market sentiment and a gauge of the health of the world economy. And so very interesting that we have all of these questions around trade, and everybody's expecting a recession, and yet the world index just hit all-time highs. So that is most interesting. And then finally, on the crude front, Iran's Khomeini spurred arrogant U.S. nuclear deal proposal. Basically, he said the last proposal that the United States gave is unacceptable because they are going to continue enriching uranium, and the deal they offered was, again, unacceptable. So we talked to, if you remember, we talked to Joe McMoneagle about that, and he said he expects this to kind of drag on for the next few years.
Yeah. So a lot to take in overnight. My first thoughts are I just feel like inflation's getting ready to rear its head again. I mean, with some of the stuff going on with steel, I mean, you wonder how businesses are going to operate when we have these tariffs coming in with that. That makes me think, I mean, yesterday we talked about silver, we talked about oil potentially breaking out. It's not doing much today, even off that oil news that you're talking about. I think that's something that we're going to have to keep an eye on. So it'll be interesting to see what that does over the next few months. But the tariff for today, a real quick explanation, Shai, on that. They have to put in, like today's like a deadline for what? Just kind of get a little bit more granular with that so I understand it.
Yeah, so the administration came out the end of last week and basically said that all trading partners needed to submit their proposals to the United States on what kind of trade deal they want to set forth. They weren't very clear on it, like how granular this needs to be, how detailed this needs to be, but proposals are due today, and those are, whoever submits, I guess, their proposal will be first in line to have trade talks and a trade deal with the United States.
Expect him tweeting about this is what I think. Oh, this is a great deal here. Or they came in really good. I mean, that be careful of that, everybody. I think that's going to be interesting. And also, good morning, chat. Hope everyone's doing great. It's funny, WizKid said he thought I lived in Naples. He thought I lived in Naples, Italy.
Italy.
No, yeah.
Almost.
Yeah.
Almost.
Yeah. It's
sort of.
Yeah. Good morning, everybody. So, Fabio, we're going to obviously talk about Mentor Q and all of that too this morning. But you are European. You lived in the U.S. You moved back. You live in Madrid these days.
Madrid, yeah.
Yeah. I mean, what's the take right now? What's the feeling of what's happening with tariffs over in Europe?
Yeah, I think Europe is worried about the tariffs because it's going to affect a lot of the export. So, if we look at Italy, all the food stuff, if we look at all the other countries, so I think they are very worried. So that there's a lot of tension in Europe on understanding what's going to happen, for sure.
Yeah, as expected. I mean, I think the sooner we get clarity on all of this, I think everyone will. I always say this: the markets always find ways to make money. Smart people that have businesses always find ways to make money. I think once we get through this, I think it could be a good thing for everybody across the board. We'll see though.
We'll see.
Let's talk about what you do at Mentor Q. Talk about that.
Yeah, so basically we created Mentor Q with the idea of simplifying how you read finance for retail traders. And we started with option data because option is really important right now. So over the past 5 years, we've seen a lot of growth in volume. And because of that option flow, even if you're trading future, you need to understand how the option affect because option flows create futures flows. So what we do is we try to understand how market makers might need to hedge positions, large option positions, because what they do is they buy and sell futures. So if you are a futures trader and if you are trading with Ninja and on our data, you need to understand where the option market is going because it's liquidity that comes in and out due to hedging of option positions. So what we do is we create advanced models that we plot on charts that we can go through also today and see some example to help traders understand where these levels are and where there could be some hedging pressure coming from the market. So trying to follow the big money, where they are moving, where they are positioned, so that you can understand where the liquidity can go and how that can affect your strategy, basically.
Yeah, and I think it's something that no matter what strategy someone out there is trading, these can help them.
It's basically like what I always do. The analogy is like kind of technical analysis and support and resistance were invented by using forward-looking data because option data is kind of like looking at the future while price action is looking at the past. So you're trying to add an edge to your strategy by looking at what the market is thinking about. So when we look at stuff like NQ and gold, like for example, I don't know if you guys can see the chart.
Let's pull that up.
Yeah, so as you can see, this is like the NQ chart for this morning, and the market has really been bouncing around this core resistance level. So even it seems like a very simple line on a chart, is actually a very, very important level where there's a lot of call option positioning. So as you can see, the market failed to break here, tried to break again, and then move back. And this is all due to like large hedging. So like, when we hit that level, the market makers might need to hedge, and then therefore we see a rejection, or we could see potential inflection point like we see here. So we need to think about it as support and resistance, but really driven by option flow, which I think is very important for traders to understand why these levels are very important.
Yeah, I mean, option flow, it's something that's talked about more now than in the past. I mean, I think that, zero DTEs brought it more into the conversation, but it's always been the case, right? As far as it goes back for me being in the pit, what the options pit was doing right next to the S&P pit, was always having the biggest impact on what was going to happen in the S&P pit. So this is not something that's new. It's just become more dominant because of zero TTEs, because of all the expirations. Now we're going to get into commodities as well. They don't have as many expirations as the S&P, but the S&P has daily expirations. So therefore, it's just become such a dominant force, these GEX or JAX levels. So what is it? Let's talk about that before we get into it. Is it a GEX level or a JAX level?
So I call it GEX levels, but you can call it JAX depending on where you are in the world. So yes.
Well, Jimmy's in Charleston, South Carolina, and he's calling it JAX. He acts like
I call it GEX.
You call it GEX, but so who calls it JAX? The people in Europe or the people in the U.S.?
I think more in the U.S. I would say. Yeah. GEX.
So, well, GEX. Jimmy gets a break here now. And explain the importance of these levels and what they are.
Yeah, so basically we are trying to look at the levels by looking at gamma exposure, so which is a calculation that we built. And basically we are trying to understand what are the sticky levels where there could be a lot of hedging activity coming from the market makers. So we're trying to forecast where gamma exposure is at different strike prices for the underlying. And then obviously what that means is that as we reach to those levels, that can become really important sticky levels where you see like in the chart here where we gravitate around this level because there's a lot of like hedging activity and flows that goes into it, or they could become an inflection point. I don't know if you guys remember the GameStop saga back in 2021. Everybody was buying in the money call option and the market makers just had to buy more underlying to be able to hedge. So those like exponential move is really driven by market makers activities. So this is why it's very important to pay attention to these levels. And when you mentioned zero DTEs, I think February was the month with the largest volume on zero DTEs options for SPX. So it's also important, yes, it was the month with by far in history, the largest volume of zero DTEs. And it's important to understand why they are key, because the gamma of zero DTEs is more sensible to price movement. So if you have even like a news or a tweet and a small price movement, but there's a lot of zero DTEs volume, then that's going to affect the inflowing capital in the underlying because of this sensitivity to gamma and delta.
Yeah, so go over the different GEX, GAX levels. And I got to stick to one. What is it going to be, Shai? What is it for you and
GEX.
It's GEX levels? It's GEX levels. Okay, let's stick to GEX levels. So what are the GEX levels? Because I look at them all the time. I'm looking at them right now, and I'm going, what ones are some more important than others? Let's walk through that.
Yeah, sure. So here we see we can go on and queue, and then we can flip to the other futures. The main one that we have are, so we divide the GEX levels into primary levels and secondary levels. The primary level are the core resistance that you see here, the put support, and the high vol level. We're going to talk about that in a second. But basically, the core resistance is really the strike price with the highest net call gamma exposure, right? So very, very important because this is where we see the highest net call positive gamma, right? So what does this mean? This can become, so we can trade this in two ways, right? One as a rejection or a pullback. So what we see here, the price moves very strongly to the core resistance and suddenly stops right at the level, drops back, tries again, drops back, tries again, and now we're kind of breaking, and let's see if that holds. And basically, think about on the way up, market makers are buying underlying to hedge, and as investors close options positioning, the market makers do not need to hedge anymore. So sometimes they close those edges, and that's when this level become a rejection or a pullback. But in some cases, like the example of the GameStop saga, investors are not closing option positions, and therefore market makers need to continue buying the underlying to stay delta hedge. So that's when we see a breakthrough of this level with a very strong upside momentum. So it's kind of like looking at it as a resistance. We call it resistance because it's resistance driven by the option market. So that's kind of like how you can look at it.
Yeah, and I think it's so important to note that watch the reactions, right? I mean, everybody, no matter what strategy you're looking at, no matter what levels, watch the reactions. I love how you explain this because what could be resistance and then it could turn into support because all of a sudden, if they're getting hit on too many options and they want to start hedging, buying or selling futures depending on the situation, that changes the dynamic of that level.
Yeah, and we get a lot of questions like, oh, what should I do when I reach the core resistance? Should I go short? Should I go long? And the answer is really complicated because we are talking about really complex data and option dynamics. So it's essential to understand, like, look at this candle, right? We're trying to break, and now we have a strong, amazing, like, big candle to the downside. So it's kind of like, this is not casual. It's like the market structure is how market structure work, and is our option flow is really important for
yeah. We didn't have any news, did we, Shai?
No.
I'm just watching.
We just had ADP change, employment change, and private employment rose to 37,000. Estimated was 114,000.
Yeah, so let's look at the data for today so we have that up too. Let's go over real quick what data we have. So pullback we saw in equities. Look at losing the time here. So let's see, what other data do we have for today, Shai?
The other data we have is at 9:45, we have S&P Global Services PMI. We have at 10, we have ISM, non-manufacturing PMI, which is the same thing as services PMI. Both are supposed to come in soft according to the survey. We'll see what happens there. We also have crude inventories at 10:30, which I will be in with Kane. And then again, 2 p.m., the Federal Reserve Beige Book that we talked about earlier.
Yep. All right, let's go back to Fabio's charts. And I want to take a look at this as we're getting markets moving live here around this. And so now you go back to it, Fabio. Now you get to the put support area. So we went from call resistance to put support. We're looking at NASDAQ here and Mentor Q's GEX levels. And then you've got GEX 3 underneath it. And so talk to us about what put support is in GEX 3.
Yeah, so put support, similar to core resistance on the opposite side, is where we have the most put gamma, so net put gamma. So it behaves the same way. So basically, this is where we have a lot of put activity and put positioning. So it behaves as a support because, again, when we move to the downside, investors might close option positioning, and therefore the market maker do not need to sell anymore, and they just buy back. So basically, we see, again, could be a reversal trade, or it could be an inflection point. And it's also important to understand the concept of positive and negative gamma. We can explain that in a second. And when we look at the other JAX level, the JAX 3 and JAX 1 to 10 are our secondary level, which are very important still, but they are not the main one, like the core resistance and put support, and they are the top 10 level with the highest gamma. So again, they become reaction zones. So if you are a scalper, if you are like a day trader, you can use those as your support and resistance area or as your take profit target.
Well, let's go there for a second. So number JEX 3.
Yep.
GEX 3. I'll get it, Shai. That's the third most important one, or the third most. Explain why they're numbered 1 through. You said the top 10, so we'll go over that.
Yeah. So for example, if I open up our dashboard, we can look at how to look at the data. So if you open our main chart, which is the net gamma exposure, you can see basically the main levels. So with the widest bar is where the primary levels are. So here, this would be our core resistance for SPX, and this would be our put support for SPX. And all the other like very big bars that you see here would become our JAX 1 to 10. So in this case, this bar here would be probably JAX 1, this bar would be JAX 2, JAX 3, and so on. So essentially, what you are trying to look for is the number is important, but it's also important to understand the level, the value, and how big those bars are. Because again, even if it's JAX 5, but we have a lot of gamma, then that will become a very important reaction area.
Got it. Again, it comes down to the reaction when it comes to these.
Yeah.
And what I like about them, again, because you have so many traders in here that are using, whether they're using support and resistance levels, or they're using, even like the order flow guys. I look at them, I could see if they have, a GEX level at an area where they're getting an order flow labs, indication.
Yep.
And they're looking at that going, well, this could have a little bit more value because that level's not changing. I mean, that level, watch the reaction to it. If you're seeing order flow around that area, that could help you say, look at, because that's something that's probably coming from the options market.
Yep.
And so if they see absorption, they're talking about it. I watch these guys every afternoon. and they really get detailed into what's happening at every price, and their triggers are going to be based upon what's happening with order flow. I would bet that a lot of that is occurring because of what's happening at the GEX levels.
Yeah, and the idea, I think, Anthony, is like if you're a trader, you have already developed an edge, so you already have a strategy. This level can help you then have a better execution because they can keep you out of a trade, they can keep you in the trade longer, and they can also be your kind of profit or stop loss target.
Bingo. Shai, markets continue to get weaker here. Just curious if you're seeing anything out there. I know that we had this ADP number that came out. Is there anything that we should know that it's coming off of this data and why the markets are seeing selling continue to come in?
Not really. I mean, it's just showing that hiring has fallen to the lowest pace, which is interesting because markets generally like this news because if we see weakness in the labor market, that means the Fed's going to cut, right? And so interesting where actually bad news is bad news today.
Yeah, that is interesting. Let's take a look at the S&P.
Yeah.
I wonder what the bond market is doing. I've been watching. So bonds really not doing much. I mean, upticking just ever so slightly. I mean, not a big move in bonds. It's more happening in equities, which is interesting, Shai. We'll come back to it, but I think that see if anything else comes on the tape. Bond market slight uptick. And that's where I would go following an ADP number anyway.
So I think one interesting trend that we've noticed is that so the market rebound on the NQ and ES, but if you look at the Russell, we're not anywhere close to the all-time highs. So I think the market has been driven mostly by a lot of like NVIDIA or like Microsoft, but even the Max 7, they're not back at the all-time high. So it's kind of interesting to understand like if we look at the S or NQ, we are almost at all-time high, but the other assets are not kind of following. So I think it's important to look for this as well.
Yeah, absolutely. So S&P this morning couldn't get to call resistance, so it stayed short of it. If anything, that's more of a bearish sign because when you can't get to resistance, it's typically a sign of weakness. And now we're getting near put support, which comes in at 59.75-ish. When you look at the overnight, I mean, that's the low.
Yeah.
That was pretty interesting.
Yeah, and also you see how this put support was kind of like a reaction all through the night session, basically.
Yeah. And go over put support. So what that means behind the scenes is what?
So basically, put support is similar to the core resistance. If we look at, again, at the net gamma exposure chart, we are looking at the level with the highest net put gamma. And because the reason why this is important is because a lot of investors are betting on downside moves. So as the market moves down, market makers are shorting the market. And when we get to that level, investors might monetize their option. And that means that the market makers is kind of like not needing to hedge anymore. So basically, they buy back the short that they had. So this acts as a support. But at the same time, when we are, for example, in negative gamma, the put support can get broken. And that's when we see a very strong downside move, like we've seen like in the past few months to the downside. Yeah.
Go over it, negative gamma versus positive gamma.
So it's a very important concept that we need to understand. So first of all, you can look at where we are here in the dashboard, so we can see our gamma conditions. So within S&P, we're now in positive gamma. Why is this important? Because we need to understand that the gamma of options can be positive or negative. And whether we have more people buying options or more people selling options, that dictates if we are in a positive or negative gamma condition, right? So why is that important? Because market makers tend to hedge differently, whether we are in positive or negative gamma. So in positive gamma, they buy when the market drops and they sell when the market goes up. So basically, they stabilize the market. So the volatility is kind of low when we are in positive gamma. In negative gamma, on the other hand, the market is net short options. So we're selling more option than buying. And therefore, the market maker is hedging in a different way. So they sell when the market goes down and they buy when the market goes up. So they accentuate the downside move. That's why when in the last couple of months, when we were in the tariff situation, we saw these massive drops that were also driven by news, but also accentuated by the flow from the hedging activity of the market.
Yeah, I learned about this a while ago, and that is such an important aspect of what's happening within the tape. I mean, really, you can't put a price on that because that's identifying market environment straight through the options market. I mean, I talk about market environment every morning with Pharm, and when you want to talk about us, we're looking at what's happening in charts and what we're seeing in other things. That is the market environment.
Yeah. And I think it's very important when you come into the market, the first thing we do is look at the gamma environment. Are we in positive or negative gamma? Because if you have a small stop loss and you're trading in Q and we are in negative gamma, then the chances are that most likely you're going to be chopped out because the volatility is going to be high. So it's very important to understand if we are in positive or negative gamma to adjust your risk management and obviously strategy as well.
Absolutely. And I think this is very helpful for day traders. I want to go to gold. Shai, you and I have been talking about this. The gold market continues to have underlying support. It's a global theme. It's probably the only market right now that I see that has really a true fundamental backstop, right? And I mean, we could say that for the metals markets. Let's just say in general, right? And they have also the technicals working with it. And so that's the most dominant trend on the tape, that at least from the markets that we watch. What are you seeing today, coming into today with gold?
So I think with gold, we've seen a tremendous uptrend. I think we're up more than 25% year to date. So very, very healthy market. But I think it's very important that we also take a look at the data, especially because at the end of the month, we are going to have a very important expiration. And we can open up our gold chart or our gold ETF. We can also go on the future. So we are overall bullish on all the metrics. So we look at option activity, is very, very bullish. We look at momentum, very, very bullish. We still don't have a seasonality yet. And we are also in a neutral volatility. So the market really is not really a low volatility, is not even a high volatility. But overall, if we look at the net gamma exposure, we don't see much put option activity, almost nothing. So very, very important. We can look at a different expiration. But I think one thing to understand is that at the end of the month, we are actually coming up to a very important expiration where 53% of gamma will expire on June 20. So very, very important because all these options will expire. So again, that could mean that the market makers do not need to hedge anymore, and there could be some technical movement on the back of this expiration. So I think overall, we are seeing a very, very bullish market on gold, but pay attention to the option expiration for sure.
Somebody else talked about that June 20th date, Shai, with us. I don't remember who that was, but that's something to keep in note, traders. June 20th for gold, put that on the calendar. Also into the first day of summer. Isn't the first day of summer June 21st? Solstice?
Summer solstice?
Summer solstice. We only got you for a few minutes left. Let's dig into the tape a little bit today. Give us an outlook. Most people are S&P and NASDAQ. I know we've already looked at those levels. I hand it off to you. What are we looking at? Key levels coming in today for Mentor Q for S&P and NASI.
Yeah, so if we look at the NASDAQ, again, I think that core resistance level is very important. Take a look at the high vol level. So that we haven't talked about that. This is kind of like the level where the market shifts from positive to negative gamma. So again, this level is a very, very important reaction area. And if we break through this, it could be a lot of increased volatility.
What price is that level? Just so everyone
21,640, 21,640.
That's a very important level for NASDAQ today.
Yeah. And basically, yeah, so I would pay attention to that. I can also go in the indicator. I can show you this is a new feature that we will release soon where we can use our roadmap feature to potentially draw those areas. So if you're a scalper, if you are a day trader and you want to trade from level to level, we can help you basically create those areas right in the chart to have like a very clear roadmap for the day.
I like that. I haven't seen this yet. I have not seen this yet.
Yeah, this is a new feature that we'll be releasing soon.
Very cool. So 21,640 key area in NASDAQ. If that holds, that adds a bullish bias to the day. If it fails to hold, that could add a bearish bias. Again, everyone watch the reaction.
Yeah.
And then below, give us the levels below and just above it, and then we'll go to the S&P.
Yeah, and then you don't have many JAX levels. So 21,600 is our JAX 5, and then we have our one-day minimum, so which is around 21,460. So there's not a lot of like other important gamma levels below that. So pay attention to that potential break. And then to the upside, of course, we have our JAX levels here.
above 640 was the next one is like 21,750. That was this morning's.
Core resistance, yeah.
Yep.
Exactly.
Okay. All right. Let's move the S&P.
Yeah. The S&P, again, we have our put support, and then we have our 5,960 to 5,950 is our JAX2 and JAX5. So those are the key level. Right now, we are moving around this 5,975, which could be an important support level for sure. And then, of course, the 6,000 is the core resistance that has been there for the past couple of weeks. Maybe last week, I think it was, we were moving around that and we couldn't break, and it's still like a very, very important area for yes.
And that makes sense from the options market because it's a big round number. Everyone's looking at it. And so you could see a lot of options volume being done at that level.
Yeah, absolutely.
Someone like myself who's been trading options over the last few years, it's funny. It's like, I've noticed that you find a level on a chart that I'm looking at, and like, let's just say I like 59.80. I'm not saying I do, but I'm almost always trading the 6,000s or the 59.7. I mean, you're trading the round numbers just because there's more volume there, and for the time horizon that I'm holding them, I trade the ones that are more liquid. And so it's just the way it is. I mean, so that's why, everyone's like, oh, it's a big round number. Maybe not mean nothing on some people's charts, but it matters in the options market.
Absolutely.
And so it's just one of those things that it gravitates towards. Everybody also understand, too, that this is available for all, maybe not all futures markets, but a vast majority of the ones that we watch. And I think that they work great across the board. I think when you get into the nuances of crude oil and all these other markets where there's a lot of options activity, I know I find your work to be, it gets even better. I mean, I love it on the indexes. The indexes we're all day trading it, and you're always going to have a little bit more wiggle room around these areas. I've been watching it for a while in crude and other markets, and I'm like, man, it is almost like it's incredible. And so remember, everybody, this is all available through Mentor Q. Those indicators are all available on the NinjaTrader platform. Jim Cagnina goes over this every single day in the Edge Report. It's become a huge part of what we do here at NinjaTrader, and your work is fabulous, Fabio.
Awesome. Thank you.
And thank you so much for being here. Again, everyone, put the link in there. And more things to come from Fabio down the road with us and Ninja. He and I had a great dinner last night with Shai. Wasn't that great?
It was great.
We had great weather, and we're talking about more ways to integrate Mentor Q for the users. Stay tuned for that. Fabio, again, great to have you. Shai, great morning.
Thank you.
All right, everybody. It's about that time. We're going to hear more about Gax or Jax. We'll see what he says now. Now we'll see what he says about this. All right, everyone. It's that time for this morning's Edge Report with Jim Cagnina. Take it away, Jimmy.
All right, well, let's clear this up once and for all. The maternal line of the Cagnina family traces back to France way back in the day to the powerful last name of Jax, spelled Jacqueus. We're going with Jax no matter what. End of story. Let's take a look at the micro E-mini NASDAQ right now. Interesting. We have a little bit of resistance that we're coming up against as well, but yesterday's close was the highest close tracing all the way back to February 21st. We're about 745 points from that all-time high tick, which is amazing, by the way, at 22,450. So all the moving averages are moving up. The stochastics are tangled in love around that 80 level. Drilling down to an intraday, we do have some key areas here for the bulls and the bears. Let's talk about the bears first, since we're selling off a little bit so far. We have a high vol level, again, Mentor Q level right here at 21,640. And then a little bit lower, we have a pivot as well as another target for the bears here, 21,615. And then a lot of empty space on the downside. For the bulls, we do have a put support level right here. We just kind of traded through it, 21,700. We also have call resistance up here at approximately, well, not approximately, 21,750, right next to a blind, right above that blind spot 3. Jax 1 is all the way up to 21,800. Further, R1 also possibly in play up here around 21,832. I want to move over to silver right now because this has been a very interesting chart. From a daily chart point of view, as well as an intraday point of view. Look at how long this area of support and resistance. We've traded about a couple bucks high to low here in silver forever. All the moving averages are going sideways right here. Monday, huge breakout to the upside, and we didn't give a lot back. So now this area here around 34, which used to be resistance is now support. We're way away from that midpoint here, and stochastics are also kind of arcing up, suggesting more bullish potential here in silver after that incredible break. We're holding tight here. I am bullish in this market right now. Intraday, yeah, we're selling off a little bit. We've been trading below that session VWAP recently. Especially after the London initial balance. Right now, we're right at that JAX 1 level, 34.50. Put support was 0DT. Put support was almost tagged perfectly at 34.35, a little bit lower for the bears, JAX 4, and then S1 is approximately at that 34.25 level. Two areas of interest down there that I'm kind of looking at as a little bit of a pullback. On the upside, we have JAX 2. Yeah, we traded a little bit above it right off the bat, but that's kind of an important level at 34.750. Previous session's highs next for the bulls, 34.935, and then that important call resistance and 0 DTE gamma wall up at 35 even. So silver's definitely an interesting market to consider trading. Let's shoot over to the 30-year Treasury bonds while we're at it. 30-year bonds, let's go to daily chart real fast. This is up until a minute ago, this was kind of a reversal pattern back to the bear side. Now we've caught a little bit. Prices are kind of moving back up. Notice we're right between that 8 EMA and that 21 EMA right now. We did have a turnaround doji, but we didn't get follow through so far today. We caught a bid so far, which is kind of interesting. That 38.1% fib line is sitting there right now, acting as resistance. We'll see if we could pop above that, see if we could pop above that 21 EMA. And I'm kind of amazed we're seeing this candle the way it is right now. Let's check out the chart. I mean, it's just, wait a second. Am I in the right month? I am in the right month. This is September. I had to make sure because we rolled, right? We rolled first here, but it must have liked some kind of economic news that Tracy was just talking about because it did catch a bid here. Right now, we crushed that high vol level at 21.16. We're right at previous session's highs right now at 112.25. Forget about R1. That's in the rearview mirror right now. We have that JAX 1 and that one-day max at 113 even for the T-bonds, Treasury bonds, and then R2 above that. Let's kind of go back down here. We have S1 for the bears. S1 is approximately a 111.23. And then we have that 0 DTE put support supplied to us by our good friends at Mentor Q at 111.16 on the downside. A little bit further, we have that one-day min. And these one-day mins and one-day maxes, I'm telling you, when me and Shai do our hot commodities report, I don't know how many times we're seeing these levels act as support or resistance or at least targets. One-day min right now is at 111.06. So recommend everybody check that one out as well. Let's really quickly here in the last couple seconds shoot over to crude oil just to see what's going on there. If anything, really nice consolidation area here. This area of resistance up here, and Shai talked about this yesterday, $64. That's a pretty good level right there. It's going to be hard to break. It's going to take a lot of love to get us through the night here to break on up. But right now we're at that 50 EMA. And, the EMAs are all kind of tight right now. So again, until the news tells us otherwise, we're looking for some sideways behavior here. Even though we have a really nice stochastic crossover in the middle of the range right here, we'll see. Today's red candle's not helping, but anything's possible. Let's just go intraday right now. Intraday, we're having a little bit of sell-off as well. We have that put support, 0 DT put support at 63. Below that, JAX 2 is down at 62.5 right next to that S1. And then on the upside, real quickly, JAX 4 is defining the top of the conversation right here. It's 63.75. And then finally, we have JAX 1 at 64 even. That is today's Edge Report. Back to you, Delhi and Pharm.
Thank you, Jimmy. Good morning, Pharm. Did you catch that Mentor Q segment with Fabio?
I caught kind of the tail end. I'm going to have to go back and watch it because it's always been something of interest to me. I did catch the part where you're talking about order flow traders and how that can sometimes play in. And I do maintain an awareness of what some of those key levels are because I am monitoring those levels. And there are some trades that can play out based off of them. But more than that, I'm sort of looking because I'm always monitoring for, what I would call organic participants versus, dealers that consider that just, they just do what they have to do, right? And so if I'm seeing, for example, a seller absorbing buyers at a spot that's not really related to one of those, key gamma levels on a dealer profile, then I start to pay more attention, as opposed to like if I see absorption at a very, very obvious level, it's like, oh, okay, well, a dealer is positioned there, right? And I try not to think too much of it. Not that I can't trade off that, I can, but that's something that I definitely keep an eye on, those levels to some extent anyways. So, but I'm gonna have to watch that back fully for sure.
Yeah, I keep them up on my chart, not the one that I'm showcasing every day here. And Fabio just added that new indicator where it's highlighting those levels. I thought that was very cool. I'm going to start talking about it more and more. I watch them really, in particular, I watch them a lot in crude and gold. It's interesting because I was talking to Fabio about this last night and this morning, is that in gold, there's really like no puts being bought. It's just the weirdest thing. I mean, you would think with a run like this, that some puts would even be traded, and he's like, it's just almost all calls. I found that to be very interesting, where like, is the tape over leveraged, Pharm? God forbid, right? I mean, it gets interesting to see that. I was like, the contrarian in me is like, well, everyone's kind of loaded here, but nonetheless, the tape continues to perform to the upside. So you can't really kind of fade it, but it's a kind of an interesting thing. I love seeing what's happening in the options market in those non-index markets, even more than the index markets. And as we talked about this morning with him, it's so much about the reaction to them. And let's go right into the charts this morning, because I'm bringing up his levels. And I think especially right now, as the markets are, I don't think they're ever certain. So I hate the word uncertainty, but I think that the market's drifting higher. I put my morning note. It's like, look at the market's just grinding higher, creating doubt along the way. No one wants to believe it, and volume's low, volatility's low. It is what it is. I think in this moment, I want to really, really pay attention to what the options markets are doing. And he mentioned that we're in positive gamma and how that works too. I think that plays a big role in market environment. I think it plays the biggest role. And so I'll be talking about that more and more here with you in the mornings as well. But this morning you had the news, you had ADP come out, you had ZB is a market I initially look at when that happens. It didn't have much of a move initially, but now it's caught a bid. Interesting to see that the bond market is, I think, you and I have talked about this, it's looking more and more like it found a low. I mean, at least temporarily. And it's just getting back in the meat of this area. And again, when you look at perspective of what the bond market has done, you could go back to here, and it's really, it's had obviously more time spent above this area than below it. But it's more and more looking like not a bad low. And it's just something to keep in mind, that if the bond market continues to go higher, what does that do for equities? Again, right now, I don't think it's much of a factor, because you would think if the bond market was going up, maybe equities would be going up too. They're not. Doesn't mean that they won't later. But nonetheless, I keep an eye on it. And, it's bond market looks bullish. Bullish is probably a very loose term I have, but it looks at least like the low is there. I think we can continue to push higher in it. I want to get to the NASDAQ levels that Fabio had talked about, and I highlighted them as he was going over everything this morning. And you look at the two key levels, 21,640, he says, is the key level to watch for today. And, you just go back and look, it's basically this low. You looked at this morning, he was talking about 21,750 as call resistance. Lo and behold, we get up there, and look what happens, right? The market goes up there, and it got just a skosh above it, and then came right back below it when we had that data, and went almost right back down to this 21,640, which he said is really the key pivot for today. And you know what? When you look at the chart, and this is what I like about it, this is coming from the options market. This isn't me drawing a line going, oh, look at this low here. If this low fails to hold, maybe we break more. He says it's of massive importance on the options market. So for NASDAQ today, keep in mind 21,640. That's a Mentor Q number that he says if it fails to hold there, could be bring in some sellers. If it holds there, it could bring buyers in. And then 21,750 is the pivot to the upside. And it is aligned right within the range that we've been in. So it gives you, to me, for day traders, some key levels to watch for coming into the trading day. So I will keep a very close eye on that. S&P, look at the levels in S&P. 6,000, the round number. Here's the thing, Pharm, and I mentioned this with him about the Mentor Q levels. I always tend to see round numbers as like the key areas, and it just makes sense for options, right? If you're trading options, like I'm trading options, I know you're trading options as well. A lot of times you see the strikes. You got these 0 DTEs. You got a lot of different strikes. As many strikes as you want to trade, really, in the E-mini S&P as we get into the expiration time. And majority of the time, it's still mostly around the round numbers, unless you're just gunslinger trading the 0 DTE, the day of the 0 DTE, which I'm obviously not. I'm trading them usually a week out. I'm trading 5 to 7 DTE typically, but always the round numbers are the ones where there's just more activity. And right now, 6,000. He said continues to be a big resistance levels on the options market, which is showing up in the charts here. And then today he said the key level to watch is 59.75 for pivotal area lower. If that breaks with S&P or with NASDAQ around we talked about the NASDAQ levels 640, gets interesting today. I think for me in general, when I would go to the daily charts and talk about everything today, based upon what my work is, not what I'm looking at Mentor Q, I still see, a grindy higher tape, but a tape that could break. Again, we've talked about this, 1, 2, 3% and still be bullish. I mean, moving averages have all turned. I anchored the VWAP from, I know you love that, the COT spot. I think you're going to start using that. I'm pretty confident you're going to. It's pretty good. I came up with that on the fly too. But, I think that the tape still obviously looks bullish to me on the daily, but for intraday traders that we look at, watch 29 or 59.75, watch in the NASDAQ, 21,640 is key pivotal areas to the downside today. Would not surprise me to see some selling. Again, we feel like we're in a holding pattern, Pharm. We've got non-farm payrolls at the end of the week, which is just a couple days away now. And later today we have Beige Book, which I think could be market moving based upon what Shai said. So expect some volatility in the tape. I still think it's grindy higher on the bigger picture, but watch those key Mentor Q levels today. That's what I've got for everybody.
Yeah, the first thing, I mean, you mentioned 7-day to expiry options. Those are called leaps now, Deli, for us boomers that trade such wildly distant expiries. I mean, a week, right? I buy options. People are like, "You're buying 1 day to expiry? What are you doing? Look at this boomer." I'm like, "Yeah, okay." We joke about it, but I mean, it's true. Everybody's trading 6-minute to expiry options now, but. What I find interesting about a lot
I don't
of these
have
key
my
levels,
body can't handle that.
yeah. I mean, even 1 day is definitely a bit much for me sometimes. But I've been dabbling a little bit more, a little bit of fun, a little bit of degen once in a while. So, what I find interesting about these levels that you'll get in dealer positioning is, I mean, they almost always seem to correspond to a key structural element on a volume profile. So I find that really interesting. And sometimes going way back, I mean, 750, I think he said on NQ. I'm using 740 to 760 as a bit of a range. Top of my head, I think it was a key LVN from earlier in the year. And then would you say 640, something like that? That's basically the afternoon pullback low on NQ from yesterday, right? And that's when the profile gets a little bit thin. And so from a volume profile perspective, if you lose an offer, that low, you've got a little bit of a thin profile below there. All of yesterday afternoon's inventory is trapped above. And so you would expect to see some selling. Conversely, if you come in, you sweep that out and then reclaim it, then you're still in the meat of yesterday's, primary distribution roughly, and you expect to see a rally. So, it's interesting to me how those levels very, very often align with just key market structure, volume profile, market profile, some of your classical analysis. So that's just something I see all the time with these. I'm definitely not the expert at a lot of the gamma banana vanna stuff. But I do find very, very similar spots. And that just helps to have some nice added confluence, I think, right?
Oh, I agree. I mean, it's funny how much it's aligned with the technicals. even though there's probably a very low chance that a lot of those options guys are really digging too deep into the technicals that we're looking at. I know that there's probably some being done, but most of the options traders I look at, I talk to, they don't even look at charts.
Yeah, I mean, you've got some. Certainly, the dealers aren't, right, but I mean, if you have larger participants, maybe some of them are. I mean, they're looking. I mean, everybody's obviously going to look at some kind of technical aspect, whether it's support and resistance, volume profile, what have you, and make their decisions based off of that. So, no real surprise. We're all looking at the same stuff. We might look at it differently, but I do find it interesting that it aligns. But yeah, big picture, back to the chart. I mean, we had boxed this out a while ago. So 59.87.5 is the top of the 3-week range on a cash hours basis. And, we flirted with that overnight. We traded above it, liquidated through it on the soft ADP. So we have potential, and this is what today is all about to me. We have potential for, a failed break of this range. Top of this range is generally a sell until proven otherwise. But I mean, the problem is, any kind of bearish setup recently has not produced any kind of bearish results. So, I've been cautioning everybody against getting too bearish, if we come up here and we fail. I mean, we do have NFP Friday. We've got the whole week of jobs data. So, are we ready to break this out given we have NFP in a couple of days? Well, maybe it makes sense that we don't. And so we could see potentially some weakness, but we haven't seen sellers of any kind of meaningful size come into this tape in quite some time. So I'm being careful being too bearish, but I'm also not antsy to get long up here top of the range. So big picture, it's still just a box. I will add that's interesting, also aligning with the Method Q levels there, 59.75 ES is roughly going to be the 3-week high on SPX. So because of contract decay, you've got your cash hours high of the 3-week range at 59.87.5 on ES. For SPX, it was 59.68, which roughly would be 59.78 on ES. So basically where we're sitting now is, the SPX 3-week balance high. So it's definitely a big spot. And I want to talk, a little bit about yesterday, aside from the fact that it was pretty wacky with that overnight action, how, we just sold off all night. The market was completely bidless. And then we just went zippy off the overnight low. Was pretty crazy. But, what was key, here's the cash hours open here. We opened just above 59.40s. And if you look left at the prior week, we had talked about, this nice clean distribution from last week. And so finally, market being able to bid, that volume from above allowed for this move, right? I mean, any seller that's still trapped here just had to cover, right? And so, just look at that. I mean, it was no red candles allowed, basically off the overnight low. We had one red 30-minute candle, and that's it, all the way up into that high, I think. So that was a pretty wild move. So there is some pretty weak backside structure. So if this thing does want to break down, then I think, we could get a decent pullback. But like you said, it doesn't need to be necessarily bearish back on the daily. I mean, we could fill in this box a little bit more, and maybe that makes sense into NFP on Friday. Breaking out today, it's certainly positioned for a breakout, and maybe it does. But I mean, if it doesn't, I think we still need to wait and see what happens on Friday. It makes sense for the market to do exactly this. Into what I still think is the most key market data point right now anyways, which is ADP.
Yeah, I wouldn't disagree with that, because I think that if the job market starts to shift, I think that brings the Fed more to the forefront, right? I mean, the tariff news we know it's so unpredictable what President Trump is going to put out and do. And I know that Shai talked about some deadlines today, but if the job market starts to shift in a bad way, it gets interesting. If it stays really strong as well, what does that mean? I mean, either way, I think it's going to be impactful on the tape.
Yeah, that's right. I mean, if you go back to the beginning of the year, we were selling off on weak economic data because of growth concerns, right? And so that was very bad for equities. We would have bonds bid, equities sell. We were using USD JPY at the time, looking at that. And that was what the market was concerned with at that time. Now I feel like it's maybe a little bit different because back then, LOL, there was like supposedly going to be like some spending cuts and things like that. And now it's just like, yeah, we were just joking about that. And, we're going to do tax cuts on top of, spending everything. So, I mean, if there's some softening in the economy, then, we continue to see, spending increase and we get a, tax cut. Like, I mean, it's not going to be that long lasting. So we had gone to, 69% chance of recession to, effectively zero. I don't see us slingshotting back just yet into fears of recession. I mean, unless NFP comes back with like some huge unemployment spike that we're not expecting. So I don't think the market is quite ready to be concerned over growth. And so maybe we get a breakdown today based off of this data, but I would almost submit that might just be the market not quite being ready to break out of this range of ahead of NFP, because it does make sense to balance, to me, into the most important catalyst. So, I mean, we'll see. But the things that I'm looking at, so I mean, here's your 59.87 half, and it's interesting that we left this huge LVN, huge just meaning it's really thin in this case, right at that 59.87 half. And so this is going to be your key spot for today. Can we break and sustain above there, rotate through these overnight highs? And if the answer to that is yes, then it looks like a breakout. As of now, it looks like potentially a failed breakout. And so you have to ask yourself, and this was my entire plan for last night with the Discord and the Substack, is like, well, how do you ferret out whether this is an actual failed breakout that could then rotate all the way back down? Or is it just a trap? Are we about to get trapped? We're going to come in here, we're going to sell off today, and then, we just rip back up and break out afterwards. And so to me, the first thing is like, I mean, you don't have to be first in on a failed breakout. If this is a failed breakout and we end up taking out yesterday's cash hours low, then I think it's a failed breakout objectively. But until that happens, we still need to be open to the possibility that any selling today could be a bit of a trap. And so I'm just being very, very nimble today and be very selective with the trades, maintain a neutral bias on a big picture, but aware that, this failure here could be problematic. But it's just, I feel like we very often get traders that get biased on the bear side, and they see a few 5-minute candles, a few 30-minute candles into a failed breakout, and they get all bared up and then just get trapped. And so very wary of that. And so what that would look like, I mean, again, this area here, so I'm using 74.5 to 77.5 on ES, basically corresponds to the SPX 3-week balance highs. So, I mean, if this holds today, then we're getting rotations up towards 87.5. We can retest there. And then if that is reclaimed, then we can find rotations to the overnight high. So it's kind of nice to me that the market was kind enough to put this LVN here. That's basically separating these overnight distributions, because it makes it pretty clean. If you want to take your shot short up here, let's say, 87, 88 range, I think that's fair. And then you're just stopping out if we get sticky above 59.87.5. So it's at least, risk is reasonably well defined here. And then if you like longs, you can work against this low. Certainly, we've got the overnight low. I like that we kind of swept out these lows here. I took a long while we were listening to Mentor Q, already well managed on that. If it works for more, that's great. If not, whatever. And then the next spot is, for me, it would be the same on NQ, which is a key Mentor Q level they mentioned, which is the afternoon pullback low from yesterday. So you've got this spot here. And so to me, if we come in, and it's going to look terrible if we sell through the overnight low. We've talked about that before, and we haven't been seeing it much, right? It is suggestive that maybe real sellers are in the tape if we come in and drive through the overnight low. We're still miles away from yesterday's low, however. And so to me, if we come in here and we sweep out this afternoon pullback low, maybe we come into even down to like 59.60, But let's say 59.60, 59.67, something like that. We sweep this out, reclaim it. Then we're coming back up here to retest this. And then if we reclaim this, we're probably going to rotate back up to 59.87.5. And then if we take that, then we rotate to the overnight high. So to me, those are the rotations. And it's going to be, potentially very easy to manage risk, whatever side of the tape that you're on, with these spots based on the way the overnight profile has sort of been kind enough to complement yesterday's profile. So that's what I'm looking at, potentially along on a sweep of 59.68, basically, that reclaims. I would be cautious up here, given all this volume that's been put in, all these buyers. So I would be taking profit here. If that then rejects from below, then that's a valid short in my mind. And then similarly, we talked about this spot up here, 87, 88. You can work against this on either side. If you're long from here, you're taking profits up here, and then you can leave runners for the overnight high if that sort of reclaims and bids. So it looks clean to me today, to at least have good setups.
Yeah, clear, concise. I could see these rotations right now, and I think that's the way to trade this tape right now. Again, I go back to when I zoom out and I am trading multi-days right now, it's just so difficult to manage risk. I think you can see the volume in the tape dropping because you're losing participation for the medium-term time trading, medium-term time-based traders like myself, because there's just not a lot to do in equities. You can't really be long up here. You can't really be short up here. It's a day trader's market. It has been for weeks. But the thing is, for the day traders, don't overstay your welcome. Trade these rotations. That's what it is, because the market on the bigger picture, it's this slow, grindy chop higher. It's one of those things where it's never the easiest for anybody, but you have to adapt to it. It is what it is. And as usual, Pharm, thank you so much for this. It was great to get your insight too, coming off of Mentor Q. I thought it was really great hearing from Fabio today and how those numbers play a role into some of the work that you're doing, and you're seeing how the options data it looks against a technical analysis. And I thought that was very important for traders to see that and understand how these options traders are getting their levels from Fabio, and then how they could even be aligned with technicals. So great stuff as usual. We do this every day, me and Pharm, pretty much from 8:30 to 9. Hit that like button for my boy Pharm. He's the best, one of the hardest working guys I know on X, and of course with his Substack. Pharm, I will see you tomorrow. Have a great trading day today.
Yes, sir. We'll see you tomorrow, Deli.
All right, everybody. Today's Wednesday. What happens on Wednesdays? We know what happens on Wednesdays. He's here. I can't wait to see what he thinks about what Mentor Q said about the 21,640 level in NASDAQ. This man loves a support area that fails to hold. Who is that? That's Trader Kane. Next up, it's Trade the Open with Kane.
Ellie, how are you?
There he is. Good morning. Or good afternoon.
Good morning. Well, it's afternoon for me, yeah. But it's morning for everyone else. How are you?
Yeah. I'm doing good. This morning, Mentor Q, I don't know how much you caught of it, but it was, I really enjoyed it. Going behind the scenes, I had known a lot about this stuff. I had talked with him a lot in the past, and understanding how they get their GEX levels for all the indexes, all the other futures markets. I think they're really good, man. I got to tell you, I don't know if have you ever watched them before?
I haven't, no, and I missed the morning segment because I was doing some other stuff. So tell me what they said. I'm intrigued.
Well, so today we'll get into the details for today. He said 21,640 is a really big area today for the Nasdaq. It's a big options level. And if it fails to hold, you could see selling escalate. And one of the key things that he talks about is, when you've got a big options level like that, watch to see if they defend it, or if it pushes through it, you could see volume coming in. And he talked about overnight that 21,750 is the resistance level from the options today in the NASDAQ. So when you box that out, you got 21,750 to 21,640. And you don't need to be a great technician to go in and box out what basically happened from yesterday afternoon to today to see that the options markets have what kept the NASDAQ boxed in. And what I liked about him, Kane, is that it's obviously a non-bias indicator because it's coming from the options markets, but it can accentuate any strategy. It's about how the reaction is at these levels. And you and I both know, because I know you follow everything that happens in our industry. That's what I love about you. You're always open to learning and getting better. Options markets play such a huge role in what we do.
Yeah, look, I think especially when options contracts roll, it kind of, you always see that volume pick up in options, the options world, and it kind of shifts the narrative, especially when we get a new month and a new quarter. We're in the new month, we expand, and now options are squeezing at a pretty key level. I'm going to be really honest. I don't want to touch this with a 10-foot barge pole right now, purely for the fact that it just looks very trappy. I mean, you were talking to Pharm about it right now, like this drop lower. Yeah, I mean, don't get me wrong. I would love to see this melt off the face of the earth and give me an entry for it to ride this thing to all-time high because we haven't got one yet in my eyes. But this just feels like it's just going to keep pushing the infinite bid. ES is very close to 6K. Nasdaq's pretty close to 21.9, 22K. Yeah, I just don't see them suddenly today on a Wednesday, 2 days before NFP, thinking, yeah, you know what, we won't do anything else that we haven't done for the last 3 weeks. It's just irrelevant. I don't think they care about it
I
anymore.
mean,
They're just going to keep pushing the bid. That's all
I'm
they're going
with
to
you,
do.
man.
Yeah.
It's just what it feels like. And you look at S&P this morning, his levels were 6,000, nice big round number on ES, and 59.75. It's a 25 point range that he's got for the key options levels. And that tells you all you need to know about this tape. We haven't talked about 25 points as two key levels in the S&P in some time. So it's like, the bulls have this market right where they want it. Slow, grindy, choppy, higher move. It is what it is. Again, you either embrace this tape for what it is or you fight it and, you get nicked and dinged and potentially taken out of business. And you know how I feel about it. Stay in the game.
In the game.
Yeah,
exactly.
Adjust your execution. That's it. So let's take a look at your charts. Let's see what Kane's got today.
For me, right, this is a pretty good bearish setup that I'm now going to fade, which may, end up with pie on my face. But this weekly level last week kind of swept out, pulled back inside the range. We've got that expansion. I like to fade these moves typically, especially when we have this. If I fade it, and I get too many paper cuts, I let it do its thing. I'm currently in that phase. I haven't had too many paper cuts, but I took a pretty big loss yesterday on Monday. I just wait to see Monday push and then just immediately rebalance into the lows and just create that weekly wick. Just looks like we're just delaying that. And now we've got Wednesday taking Tuesday high. We're at that key pivotal, I guess, resistance level, which we sold down from the Nvidia highs. ES is obviously rejecting that 6K level. I mean, not today, but it did obviously at that high. I would just like to see this probably at the open, manipulate a bit higher, and then trade lower. Am I going to touch it? Full transparency, no. I'm going to just simply wait and sit this thing out until it starts to give me entries to the upside. And I'm actually just really okay. I tweeted this yesterday. Is like I'm just really okay being sidelined in this right now. I'm fighting the tape daily, and I'm getting bored of getting into shorts because that's just the way I work. I'm a reversal trader. I'm getting quite bored of getting into shorts to get stopped break even about 5 minutes later. Yesterday just after 10 yesterday. Where is it? I took a short. We rallied into the opening range and rallied straight out. Great. I've got nothing to do here and sat watching this the whole way up, just then push the bid all afternoon. And then, 2 o'clock comes online and we just go side. We retrace and then we go sideways. And now we're back where we started or we're back where we closed, So the opening range will be interesting today. I think, gun to my head, I imagine they're going to just send it higher or maybe manipulate lower and bring it back. I don't know, and I truly don't care. I just want to watch it, get the reps in from a mental perspective because, yeah, I mean, this setup looks great, but I also am fully aware that NQ, the ES level that I really have my eyes on right now, is right here, and we are creating resistance just below it. That typically to me screams trap, and then they send it. Or it breaks and it retests and it goes. That's really the plan for me. Until 6K gets hit, I'm not interested. And I didn't actually realize until yesterday how bloody close we were to 6K, which is just ridiculous to think about. So, yeah, it's a bit of a weird one. And then NQ, similar thing. These highs, some sort of this, maybe some failure, some divergence, pullback, and then I'm just going to look to ride these right all the way back up, and I'm just going to look to play some reversal down here in 50% of this, and then play this thing to probably where I should have accepted a while ago that it's going is back to the highs. So yeah, that's my plan.
Yeah, well, it's funny. You talk about how we're right near 6,000, and isn't that amazing what the Bulls can do? How they just creep their way higher, and it just feels like, this grindy, slow grind, and all of a sudden you're looking like, whoa, we're back to 6,000, and you're just like, whoa, how did
Yeah.
that happen? And it just does it almost effortlessly. And I've been talking about this for a while. How this tape has just really gotten me on the sidelines. I really haven't done much. I think I've done maybe one trade in equities in the last 3 weeks. I've been trading platinum, which is weird in its own right, but
Sounds weird.
not even doing too much there. But yeah, it is. It just sounds weird. It's like, what? But nonetheless, I think that what I think is important, I want to focus on just for a moment here before I hand it over to you and we watch you trade the open. But it's the growth that you have is that you take the feedback from the market. It's not giving what you want. You're able to step back and readjust. That to me is more important than anything else that you're going to show anyone on the technicals, because when you take feedback from what the market is giving you, you had your bias, you had what your charts were showing you, and then when the market was not working for you, you fought it for a little bit of time, but you're able to separate yourself from that and then get readjusted. And then you talked about it today, just getting reps in and staying in rhythm. That's so important. But that little bit of time that happens in there is probably one of the most dangerous time for traders, because most people will get very frustrated and almost have a cry for help, blow out their account, or do something more drastic, and ultimately put themselves in a bad position and be unable to stay in the game and ultimately be able to execute the way that you are right now. I know that we're going to mostly focus on technicals here, but I think that that's just such an important part, I think, for you and your growth. Do you recognize that as for you? Do you feel like that frustration that that maybe the old Kane might have done something and now you're stepping back and you have different acceptance and where you are in your career?
Yeah, 100%. Like I would fight this thing, I'd grab the bull by the horns and just fight it until the death and bleed out. And the reality is that I can very much accept that this is most likely going back to the highs. And if I'm wrong and we just die, I'll get another chance to get long on this. So it's kind of a win-win for me in my head. That may feel very odd to not catch the short on the way down, but hey, I missed the short from 22 to 17. No, it was like 18K. I'm gonna live. It'll be another trade. And I'm just accepting that. The reality is, it's just boring. That's just it, right? I'm just bored right now. I'm turning up every day to trade this market, and I'm like, oh, the bulls are here again, and I will fight them for a little bit. And if they, sellers can turn up, we can dance. But right now, sellers are just nowhere to be seen, and the sellers that do show up are getting crushed. So I'm just trying not to get crushed right now. So, the Kane probably 2, 3 years ago would have turned up every day expecting today to be the top. It might be the top, but it won't be the top for long. And if we do get a flush, then it just allows me to get on side with the market and get step on the pitch. I'm sidelined right now. I'm waiting to get subbed on. And the reality is I do want to get long. I just don't want to long up here. I'm not the type of person that can just long without daily highs being traded into. And if we look, daily lows, if we look, the only time I was really able to get long was last week. Oh, I was on holiday. Great. Or the week before, sorry, and I was on holiday. So outside of that, Friday, I don't trade Fridays. We then expanded for 3 days. I need one of these daily lows to get taken for me to start getting long. And then if we really just go say, okay, could I have got into a weekly low? Yeah, back in April. Okay, so since April, the entirety of May has not traded into a weekly low. We gapped up twice. I think it might just be time to accept that we might be pushing the bid here. We are closer to all-time high than we are 50% of the range. So for me, that just screams like, if we do get this, I get to do this, and if we do this, I get to do that. And I'm just going to wait for one of them now because I'm getting a little bit frustrated in the middle. That's it. And I just have to accept that. And it's going to be boring.
Yep.
It's not going to be fun. And I'm, going to turn up every day trying to get the mental reps in and have to pay myself out of my own bank, not the market. But hey, this is just how I plan to stick around because right now I could quite easily fall bought short in my head, old Kane thinking, right, the market's bullish, let's just get stupidly long. And then the market corrects, wipes me out, and then I miss the real move. So I'm just trying to be in the real move, right?
I really don't think anyone could say that any better. It's so important, and I appreciate your openness to discuss this because a lot of people are probably going through this, and it's not been easy. I mean, I go back to it. It's like I haven't done much in the last few weeks, and you get bored, you get itchy. And the one trade that I did was a stupid trade that I shouldn't have done. That's what I was like, okay, who do you want to be, Anthony? Do you want to continue to try and fight this? Because, and even when I felt I wasn't fighting it much, now all of a sudden I'm like, okay, now I'm starting to look to get long up in here. And sometimes you got to separate yourself from that. But that takes real mental strength to do, everybody. Everyone talks about discipline and patience and all that stuff, and you see it, and they put these quotes out there. It's about just believing in yourself, believing in the situation that we really have, and staying in the game long enough to what Kane said is that he knows he'll make enough money when the market gets good again and everything is conducive to your strategy versus fighting at a time that it's not. And that's when most of the people blow up, and that's where most of the people don't stay in this business because they give up their opportunity, they steal from themselves, and then ultimately when the market gives them something that they like, they don't have the capital. And that's why you see the funding companies do so well and all those types of things, because people will continually do that because they don't have the ability to actually step back. And so I appreciate you doing that a lot. I think that for you coming in here and just doing your reps and doing this on NinjaTrader Live, again, I don't expect you to trade. I don't think you have to trade. I think you come in here, you see if something happens, great, you do it. If not, no big deal. I always got your back. So I appreciate you, my brother. Everybody, go check out what Kane's doing in the lab. I continue to see you guys grow within the lab. I love that. I've had a chance to go in there and check out what you guys are doing. It's fantastic. Go check out what Kane's doing at the lab. Make sure you follow my brother on Twitter. Kane, I hand it over to you. I'll be watching in chat. Have a great day.
Appreciate you, brother. Have a great day. Chat, how we doing? Not really, not really much to report. Kind of summarized everything. Today is going to be a strict no trade day for me. I just think the market's at this grindy point, which typically these market conditions tend to cut me up. And if we get a sell-off, I'll look to buy tomorrow, and hopefully we get a good selling day today, and then I can get into the market tomorrow. But right now, I just don't have the itch for this, and yeah, I need a good retrace, and or we need to push higher and trade into these all-time highs so we can start back trading. All-time high markets actually suit my model pretty well because we typically retrace at some point because sellers start to get more involved. But there are some like semiconductor stocks that are quite literally all-time high right now. Nvidia yesterday became the most valuable stock in the stock market again. So it's basically trading back up to these February highs, basically making yearly highs outside of the all-time highs, obviously the yearly high. But then you've got, is it Broadcom? Yeah, Broadcom, literally all-time high. There's lots of stuff. So right now for me, it's just, I need to understand if this is just a bear trap. This is a bull trap, sorry. And we go deviate and then we get the bear trap and then we trade. Right now, this is just very, very grindy. And I'm watching it and we just watched it yesterday. And this price action was horrific. You got one opportunity to get in prior to 12 for me this week. And then after that, it was just sideways. So if this is like a really awful price action for me, we are forming some sort of range here. So for me, it's I want to either fade this or look at this, or potentially some break and retest into yesterday's opening range or these lows down here, 20 and below 21,500. And I'm kind of getting this from like solid levels on ES, right? 59.50 is yesterday's opening range. The opening range for that is 5900s. This is a 50 point. This is 50 points on ES. Where are we? 50 points here. We're just stuck in this 50-point rotation. Rotate it up, and I want to see us rotate up to rotate down. That's it. Right now, we're just stuck in this very, very, very boring piece. So we can make it interactive. We could talk. Yeah, it's crazy. Yeah, Broadcom all-time high with earnings tomorrow or tonight. Maybe tomorrow. So yeah, crazy, right? It spies back at 600. SPS is at 6,000. The yellow boxes are the opening range, so the first 36 are the opening range. If you want to learn more about the opening range, I suggest you follow Pax on Twitter or sign up to the Pax group. It's everything I know about the opening range is from Pax, and I don't know a lot, but a lot of people know a lot more than me. I just use them as an indicator of what happened at the open and just like them on my chart instead of a line. So yeah, so I just have an opening range. Yeah, there's a lot. I actually don't. What I can't. I'm not going to recommend some funding companies on here, but um, there are loads out there, and you can pick one. And be um, just be aware that they have rules. Some of the rules might not suit your trading style, so look into it. All right, that is what I would recommend. Anyway, how are we, chat? What's going on? The grey box check mark. I have no idea what that means. Sorry. Oh, it's Justin's. Oh, Justin. Yeah, sorry, I didn't see Justin was in the chat. Yeah, Justin has a lot of followers on YouTube, so yeah, it will always appear. No printing from me today, J-Dog. No printing. This is a good level though to potentially take a long off. I didn't. Right? You have this 4 hour low, you have this hourly low, this 4 hour low, sorry, and then the hourly worked back up. You get this hourly open at 9, and now we should see some sort of expansion back into the highs of 9:30. Boring market, especially when I'm typically a bear. I'm a seller, right? That's funny. Saw that delete. I have some basic outlook as UK, but I thought long ES at 90, 76, and now I'm out. Yeah, nice. 76 is a nice level, right? Because it was that 4 hour low, basically. Deviation of 4 hour low, long 76s, probably invalidation at like 68s, trade it back up to 6,000s. That's not bad. It's cool. I can long it. I don't want to long it. That's the reality. Getting long at the top of the range will get you killed more often than it won't. So that's it, really. And it's just that's my opinion, and I'm entitled to it. So is the market tough right now? Inverse the chart, it's a short, great. I also wouldn't short the chart at the low of the range. You can make it yourself believe what you want. However, my logic for the way I trade wouldn't work if the chart was inversed. You know, I just want to long it then. Anyway, is the market tough right now? Depends. I mean, look, most of the people that turn up to the market each day are going to naturally be long. You know, most option contracts traded are calls. There you go. The average person that trades options is a bull. Is a bull. There you go. So these markets, your intraday traders feel like most of them feel like idiots because the tape's so aggressive. Um, But look, the sell will come, as Leo said to me the other day. The sell will come, and then we can get bullish again. And then guess what? when that market starts trending lower a little bit into like, correctional trend, then that's when we start to get more bullish and then we trade. So who's selling to these longs? That's the way the market works, my boy. There's a bid and an ask, so the bid and the offer, and then someone always offers. A market maker always offers on either side of the market. That's just the way the market works. If you want to know more about how the bid and offer works, I would suggest you tune into Stowe Stream. He always explains it very well about cross the tape. And then if not, just tune into the order flow lab streams at the end of the day. Those guys talk order flow and market participation, all those things every day because that's what they trade. So, um, yeah, there'll always be a seller and a buyer at a certain place. It's just the level of sellers and buyers at different areas is higher, right? How do I get the courage to start posting YouTube videos of being on the internet despite what friends and family thought? Um, I don't really know. I haven't really thought about that. You can ask me generic questions. It doesn't matter. Honestly, guys, you can ask me anything today. I'm not massively enthralled with the market. So unless something magical happens where we suddenly died 2,000 points and I want to be a swing long, I'm not personally going to be doing, this. Next car after the G-Wagon. I'm not really sure. I thought about a McLaren 765 LT. But to be honest, I drive the G-Wagon a lot and I like it. Let's talk about Verstappen bumping into Russell. I think I'll refrain from that. Yeah, the fact that he did get a penalty for that is crazy, eh? Or maybe he did actually. I can't remember. I don't think he did. I think they got no further investigation. I am in my 30s, Antonio. Ever hedged NQ with ES or vice versa? Brother, that is it's not allowed in most cases, so no. But no, I don't have a hedging account, so I actually can't do that. He got 3 points on his license. Free practical, get a Camry. Don't really need practical. It's just me and my life. Buy the dip, JV. If you believe that this is a dip, then brother, you could buy this stuff every day. But I agree with you. The long makes sense to the high. Um, who cares? I don't really. I don't look. I don't mind sharing my knowledge. It's just the way that people ask or the types of questions we get asked is more. It's just a bit weird, right? Buy the dip as long as the ON lows hold. That sounds like good financial advice from JV. Don't listen to that. Um, am I still bearish to 16K? No, no. I can kind of accept that that would be a courageous move. Uh, yeah, I'm not expecting the market to drop 26%. Is Piastri going to replace the Norris? Morning, Chris, by the way. Sorry, I just missed your message. Is Piastri going to replace Norris as a poster boy? I think Horner probably described it best. I think it was in the last Drive to Survive, right? He got asked if you could pick between Oscar and Lando, who would it be? And he was like, Oscar. I think he's just the more courageous driver, and he's coming more into his um into his prime. You know, they're both very good, but we'll see. JV sounds like a bull. I'd absolutely hate for us to correct today, JV. That would catch you offside, and sounds like you'd lose a lot of money. But obviously you wouldn't, because you would probably short just like everyone else at that point, right? I'm sure of it. There's absolutely no way you would get caught offside. No way, for sure. No way. Anyway, yeah, he's mentally consistent. He doesn't. Yeah, yeah, yeah. He's a new ice man. The yellow range is the opening range, the first 30 seconds. I am bored. I am very, very, very bored of this market. Binary options, trading 360. Yeah, I agree. Lando definitely has put McLaren in a good spot. Um, but we can't sit here and pretend that he is Oscar is just as good or just as bad. This is a very, very, very tight open. Okay, here we go. ES is putting. Here comes back the infinite bid. Press it. By the way, guys, if I stop speaking at some point, I've got a very sore throat today, so apologies. I don't take any supplements for focus or anything like that. I just drink caffeine, which is probably bad for you, so don't copy me. I wouldn't say I'm a here we go. They're pushing it. I'm not salty, bro. You've just come in here talking about how we're going up non-stop, and I told you. I agree with you. You just keep this is the thing, right, about a lot of people in the chat. You have to understand something. I do something on stream, 1,099 people all get to watch me lose. You say something, it doesn't play out, you just don't say anything and no one holds you accountable. So it's like the upside for you being right here is infinite. The downside for you being wrong is no one cares, right? But on the ability you're right, you get to ram it down my throat in front of 1,100 people, and I never said you were wrong. So yeah, okay, fine. The fairways with a scotch and cigar. Fuck, sounds like my throat would not be able to cope with that. No, I don't know. I woke up this morning very, very sore throat. So I just tried to not have as many calls as possible. Uh, Turn up here and then go back to not speaking for the rest of the day. So it's very weird. If time allows, yeah. I have a stupidly high rate of being wrong. Same recently. Um, yeah, we should just counter trade me right now and all make money. No, I'm kidding. It's just been very selective with my trades. But with my selective trades, I typically tend to risk a bit more. So probably the outcome is the same. Caffeine and nicotine, they would just reset another prop account. Yeah. Okay, well, if my time allows, well, let's talk about thoughts of the open of hourly and 4 hour candles. So, for example, this hourly candle, right? I'll talk you through this. This is a bit of a shit, I say a shit one, but this is a bit of a crappy one. This is the opening price of the hourly candle. Let's just make it green. This is the closing high of the previous candle. Let's just make this red, right? Forget the open. Let's just actually just do this for now, right? So here at this time frame, this is 7:59, right? This is what I look for. We have the opening price at 8 o'clock. Yeah. We have the high of 7 o'clock. Really, all I want to do here is I want to frame this to then sell down. So how can I do that? Well, this is high for one. And obviously we know how this works. Well, this trades. We have 8:15 news, so let's just go to 8:15. We take all of the highs. We deviate once more, 8:07, 8:10. So for me at this point, this is where I now frame a trade, right? Because what happened here, and again, this is me just showing you from a candlestick perspective because I don't use order flow, is that this ran out both of these, and this is a stop run. Do I know that for sure? Of course not. But volume obviously took us higher because we left some sort of imbalance, fair value gap up in the chart, whatever you want to call it. And then what I look for is I look for a closure below. And in this instance, I would then look for shorts below that on the basis to at least the opening price or to the lows of the previous hourly candles. So this is 7:26. So these are the 15-minute candles right now. So this is a 50-minute high. It's also an hourly high. So I would look for it to sell it down to 7 o'clock lows or 6 o'clock lows. In this instance, it's just a 7 o'clock lows. What happens? You're in the trade. Obviously, would you be in this today? The reality is you would not, but I'm just showing you how it works. And then at 8:15, we just sell down. The principle's the same. You just wouldn't be in this trade because it's news, and you don't trade news because that's silly. And that is simply how I use the hourly opens to get into trades. And sure, people are going to be like, well, you're just trading trapped longs up here. Maybe that's maybe what that transcribes to be. I don't know, but that is how I trade. And then depending on the time frame, depends on the time, the amount of gaps I can use. So we have a daily high, we have a old 4 hour high, and we have a hourly high. At this point, I can go down to the 1 minute, and then we have that 15-minute high. So I actually can go to the 30-second, which means if I really, really wanted to, my entry could have been the first 30-second inversion, which would be this, and then it's still the same target. So my risk to reward would have been about 4.5-ish. Again, would I have taken this trade? No, I would not, because I didn't, and I would never do that because of news. So the end. Anyway, we're pushing back up into the highs. Great. The infinite bid continues. So yeah, the lines on my chart, they're most likely from indicators. This just maps the opening price of the 15-minute candle, and then this would also map the opening price of the hourly candle. So yeah. Anyway, daily high, above a 4 hour high. All eyes are on ES trading to 6K. That's it, let me. Yeah. Should we go back and here we go. What day was it yesterday? Day 8, 812. I'm just gonna change it to 124. Yeah, it's crazy. The infinite bid just continues. Yeah, Mark, I do. Yeah, basically I trade it on the basis that the opens don't get respected anymore. So, for example, here, once we traded through 8 o'clock open, obviously it dumped, but it dumped because of news. But we could just use a different time frame, right? Same logic here for the 4 hour, 4 hour, 4 hour. This is a 4 hour. It's not below an hourly low because this didn't create an hourly low and it didn't trade back up into here. So at this point, 3 minute, is there a 3 minute? Yes, right here. So the moment we get closure above the 3 minute, I'm looking for longs back to these highs. That's it. I would like to see this trade lower. Is there a 5 minute that? Oh, look, yeah, there's 5 minute as well. There you go. So at this point, it's either the 3 or the 5. So you get closure above, bang, into the highs. Did I take it? No. I'm not looking to trade today. I'm just sticking to it. 10K open. Yeah, I think it's because a lot of people are anticipating ES to trade back up into 6K, and then I think the sellers are really going to get involved, or buyers will really step in at 6K and take it through, you know? Stop run above last week's high looks like a lock. Yeah, it does. I just really care about this 6K level on ES right now. 6K actually traded out of hours last week, right? So, oh yeah, I don't know. Here, this was all out of hours. So at 2 o'clock, came online, 6, 10, 9:30, we opened back basically just above the high and they dumped it. And now they're bringing it back up to that 6K level. So the most recent 6K level is just ES 6000 doesn't matter. SPX 6K or SPY 600 is much higher. Yeah, we'll see. We'll see, my friend. I personally think that SPY and SPX are prices are nothing. So yeah, I think they're just what's the difference actually? 599, 597. Yeah, same thing. 6K on ES, we shall see. 40 points. Yeah, bro. You keep doing this thing though, JB, right? Where you're like, I'm salty, yet you're just speaking in absolutes, like the ES doesn't matter. Well, I would imagine that the volume traded on ES versus the SPY right now is probably similar, if not bigger. Again, I don't really look at options a whole bunch, but the ES contract is one of the most traded contracts in the world. We have news. Yeah, we have news soon. Yeah, I mean, I don't want to, 6K ES is, yeah, I mean, it's, let's just say, right, the, from a, yeah, I'm not getting rage baited. You're right. Don't worry about it. I'm not going to get rage baited. I know that ES matters, you know. Yeah, I mean, Chris, this makes sense, right? It's just the infinite bid, 4 hour low. It's a good entry, especially into the 6K area. I think it makes sense. But yeah, what a surprise. Very, very, very V-shaped. Why are we so bullish on NQ? We're meant to be bearish into the first 2 weeks of June. I just think that right now the buyers are stepping on the tape. They're just really going hard at it. And why fade that? Yeah, 6K yes is a reliable rejection point. When I say reliable, like, am I naked shorting 6K ES? No, of course not. But I think some sort of deviation around here and then spike, pull lower. You basically just play any retest or any pullback into this and then just play it back down into these lows, and then these lows, and then if we do, then these lows. And then this would just make sense, right? This would just be the range, and then you just get off at the middle and then replay the range. So it just could be one big range right now, and we shall see. We shall see. How many futures traders versus SPY retail? Um, Brother, I can just tell you for a fact, you can look it up, but the ES contract dwarfs the volume of the SPX and the SPY volume. Like, it's not even close. It's so far away that, like, the statement alone is so idiotic. But you're right. The SPY and the SPX stuff matters to most of the people that are looking at the charts. But the ES volume is insanely higher. It's just not even, yeah. I know. He's just trying to bait me, but it is what it is. I just, we're not really doing much today. So, and if he is genuinely just naive, then someone learned something today. I say thing, yeah, JV, oh yeah. If you count options, it's a lot closer. Sure, maybe it is. However, Retail ETF volume, SPY matters. Mm, I would guess that institutional volume, if they want to step in, can just control it via ES though. You know, the one's going to follow the other. Yeah, of course. Would I think that NFP tends price to all-time high on ES? I mean, it would be the jump, right? It would be the jump of a century. NFP sending ES 150 points higher, maybe. We'll see. I wouldn't rule it out. I mean, we had 12% candle on NQ one day because Trump tweeted the tariffs were gone. Voltage, there is no plan for me today, my friend. I'm actually fully sitting on the sideline just watching. I don't want to be involved. I don't want to touch it. ES6K needs to play, and then I need to just see what happens. We either accept above and we play longs to the highs, which I can't do, or we start to trade lower and then I play longs from much lower. That's really the game plan for me right now. You want to see me at the BDH? Yeah, not gonna happen, my friend. I've got too much stuff to do to be jetting around the world. If I'm in Florida for long enough, then I'll happily stop by for a day or two. But there's no plans on it right now. 3 minute inversion on NQ. Yeah, I'm not really looking to trade shorts. So yeah, right now, like I said, all eyes are on ES for that 6K level. If we reject before, it would just make me more bullish. So I think that it likely just plays higher. And also we're 15 minutes till 10. We'd just like to see 10 trade in. Yeah, there's an infinite bid. Yeah, sorry. Sorry, sniper signals. News at 10. There is. There is. So really what I'm framing here is that potentially news at 10 takes us into that 6K level that we just all eyes are on. We hit it, and then potentially some sort of mean reversion, or news takes us through 6K, we accept above, and we then infinite bid into the highs for the rest of the day. Um, so yeah, not really much to do here, you know? What we can do though, whilst we're waiting, is we could just like the stream. It really helps out the production team and everyone that puts in a lot of effort to these streams behind the scenes. I personally, it doesn't matter to me. However, it matters to people I care about. So if you could please just like the stream, it's free. It doesn't take anything out of your day. It's just one click and then we can forget about it. There's 1,100 people in here. We can just all like the stream and then make the production team very happy. And then, yeah, we can do that. Why do I prefer 6K at the ES? Because 6K is just a very round number. I know you very rarely see ES reject from like 59.8. It's normally just spikes 6 and then retraces. Like the ES players love round numbers. Like why did ES reject 75s right here? It's like 75, it's a nice round number. If this was like 83, we would see like a wick to like 75. It's just the way they work. Like highs up here, 91. Basically 90s even, 88. 80, and basically more or less 90s, 75s, you know. This is still range bound. They spike it. These equal highs are all resting here. They spike it again, pull it back, you know? Yeah, I mean, look, we could definitely push through 6K. I'm just saying 6K is a very, very round number. It's round thousands, round hundreds, round tens, round fives. It's like the level, right? And look, where's the low on NQ right now, on ES right now? Right here. Oh, look. 48.3, obviously it's a spike, gone daily candles. Where are the lows of the daily candles? Yeah. 5,007. You know, they love round numbers. They've sent this from 5,000 daily opens on closes into 6K. Bulls will feel like they've won the war. They have actually won the war. There's no doubt about that. What's the buy side for NQ? Um, I imagine like 21,800s would be nice. Yeah. If we're going to slam past previous week highs, we'll see. That's probably the likelihood with the news, right? Is that we may just the news may just send us a lot higher. News today isn't catastrophic, so I imagine they bring it down, they drop it, and then bring it back, and then it goes through that 6K level with NFP. That would make way more sense in my head, right? Yeah, what was his name? James Wynn was up $1 million unrealized round tripped it. Yeah, it's crazy. Yeah, I mean we're all bored. We're just at we're at a pivotal point. At least I'm definitely bored. You know, I mean, by every definition right now, the model definitely played here. I just would never have taken it. But Kane, sometimes the model doesn't care what I think. And one of those days is today. They bring it back down to the open. Top three indicators for a beginner. I think you need zero indicators. Kane, this chart is so What do you mean? ATR is key, maybe. It depends, doesn't it? It just depends. ES futures trade at 8x the value of all S&P 500 ETFs combined. Yeah, the chart is bad, but an ES contract has 8 times the value of all S&P. Yeah, I think it's 8. Is it 8? I actually don't know the notional of ES. However, I know someone that does. What is the notional value of an ES contract? Yeah, it's 50. No, it's 265,000 dollars. CME notional. Hmm. How often do I take positions ahead of red folders? Very rarely. In fact, never. Sorry, I don't know why I thought about that. It's never. Yeah, I would. Ideally, what I would want to see here is this. This sweep, ES hit that 6K level, reconfirmation, trade back inside, some stalling, maybe another spike, then trade lower. But I would do that if we were at the bottom of the range, because that's just the way I think. I wouldn't just short. No, no, I would never just short 6K. That's like awful. Um, yeah, you couldn't. I couldn't. I could never just short that. You know. That's not the way I work. Anyway, we have news. But I wait for confirmations. I have to wait for the confirmations. Anyway, you UK people, I need to get a suit made for a wedding in August that I've been invited to. Anyone got any recommendations? Don't just say Savile Row. Most of the places on Savile Row are either too slow or I actually want people that can recommend a place where they've actually got a suit from. TK Maxx. Okay, okay. Jordan, that's mean. I'm going to get a suit made. Like, I want one made. I want a bespoke suit. You motherfuckers. Quick flight to Thailand. Yeah, no worries. Anyway, I'm glad to know that none of you actually use a tailor. It says a lot about you guys. I would like a Loro Piana. I would actually like to go to a tailor that uses Loro Piana cloth. That would be the ideal. Thanks for showing up. You're welcome. It's okay. My throat hurts. I sound like shit, but I'd always be here. Yeah, I mean, it costs good more money, but like, there's no better feeling than having a good fitted suit, you know? Anyway, someone recommended Mullen and Mullen. Well, I think that's just where the king gets his suits made. Right, here we go. We've got news in 15 minutes-ish. 15 minutes? 15 seconds. We'll see. Let's see. Let's see. I want to see ES hit that level. It probably going to do nothing. It's going to be a bit overwhelming. No, they're pressing on the bid. Fucking sending it lower. Crazy, crazy guys. Oh, I'm going to buy it up. I like where it traded into though. They can reclaim this. This will go higher now. It would have just flushed a lot of people out looking for that 6K play. Yes, back above. It's crazy. This market's just so boring. How do we entertain ourselves, chat? What are we gonna do? Who was long? JV, did you stop to get long? No, get hit. Long only? Yeah, I mean Sumo, I want to, but I can't do it here, boy. You know that. I think you understand that now. You follow my stuff closely enough to, I think you figure out how I trade. I can't trade here. That's a fact. I won't take any trades this week. Oh, I took one loss on Monday, and I just haven't touched the market since. At least not with size. No worries, Simo. Let me just put everything that's ever made me money on a shelf just to get into the market to scratch an itch. How much you sound like an idiot right now, boy. Come on. I think even you know better than that. That's a really dumb idea, whether you agree with the way I trade or not. Why do I think price action is so bad? Um, yeah, it's just not much. It's not my style. Why is it? I actually haven't even looked at the disparity between MNQ and NQ. Let's have a look. I imagine MNQ is just very out of sync right now. Just kind of, I mean, they're not that out of sync. MNQ just gapped, or is this I don't know. Anyway, Sumo, tell me, how much money have you made just longing recently? I can only imagine that 200K account is now up nice. Genuine question, by the way, not a dig, for once. Just haven't seen you tweet, so I haven't been able to see if it's up or down. No photos, no tweets. Oh, I don't even have a premium discount range drawn right now. It's just from this low all the way up. Actually, it's not. It's from this low to this high and then this low to this. So it's this. It's this right now. Annoyingly, the best entry for me was at this low. to go higher, 50% of this range. And then I should have been long here, long here. I just been away in Dubai, last day of the month, won't trade. It is what it is. We drew everything but 10K just under 2 weeks ago. Nice, good job, bro. For whatever our disagreements, that's a very nice run. Do I size up? When you have a successful day early, do I size up the next trade? No, no. The idea is to compound it, right? It's a marathon, not a sprint. Definitely a race. Trading's definitely a race, but it's a marathon, not a sprint. Do I ever use the NinjaTrader charts? I'm on Mac and I haven't set up parallels, so no, I do not actually. No. Or split view. No. Oh, sorry, chat. I'm just a bit under the weather today. Anyway, anyone want to go over anything? Anyone want to talk about stuff? Any questions? I mean, why would I buy a PC for trading when I already have a PC for trading? I will leave trading you for executions. You're right, I will. Maybe, yeah. I would like to see that ES rotation play back down to the 50s, right? 75, so back down to the 50s. That makes sense. 50s is just stays opening range. I know a lot of people are looking at this. If we break this, break retest back down to here, same on ES. A lot of people are just looking for that. Oh, can we talk brands? Brands of what? Brands of what, sir? Oh, J Bear's in here. Flat top breakout on NQ Daily was the juicer. That makes no sense to me, my boy. I'm actually not training today, Jay. So sorry for you coming in here, but yeah. I haven't decided where my execution will be on right now. Hourly swing. Or 4 hour swing, actually. We create that 4 hour swing on ES. Risky move. Looks like it could be the expansion candle we were all waiting for. I don't care. I want to long this shit from the lows. So I'll sit and wait for it to happen, or I'll look to get bearish around all-time high. Vince, I would just probably get out around 21,600. It's a good exit. I like it there because also it's this, right? Yeah. Yeah. 21,600. JV, commiserations, my friend. And now everyone's forgot about it already. I'm not saying that in a bad way, just telling you the truth. Do you know what I mean? The downsides is what. Anyway, be right back. 2 seconds. Just need to grab the door. Oh, I didn't go to take some puffs. Sorry. No, that wasn't actually what I did. I got a bad throat, but my vape's right here. But yeah, got that SMT at that low. So they're just building this up by the looks of it. Horrific from them. It's not interesting one bit. Yeah, you got out 21,660s. That's also good. Short NQ here at 720. Are you short of the opening range? Okay. Don't hate that short. Great retest. Yeah. I hate this SMT though. That's the only thing I do hate. Also, this is a strong level of support. I probably wouldn't want to support it off of here. Again, 75 back to 6,000s. They're just re-gearing up. Breaker 75s probably would make a play for a short. Yeah, no, Vince, it makes sense. It makes sense, bro. 660s. Yeah, that low. Short from here down to here still. Flush out all of these again. I don't hate that. I don't hate that to profit. What's the white stuff on the hat? Where's the white stuff on the hat? What? Making me think I've got something on my hat. Are you just talking about the text? Do you have any stats on SMTs? You hear them a lot and I understand what it is, but is it really statistically significant? Um, yes and no, but I think a lot of people use them wrong. There you go. That's my opinion. This 4 hour Devil's Mark. Yeah, don't like that too much. The white here, this is text. This is also text. And these are the air vents. What's the difference between SMT and ICT? ICT is a person, SMT is divergence between two assets. That's it. SMT is, yeah, the ICT term for divergence. What would be the right way to use them? Uh, yeah, I'm not getting into that. JV, I don't think ES took 6K. Did SPX take 6K? No, nothing took 6K. SPY? No. They're all a bit more in sync now. Yeah, who front ran it? Yeah. What's the difference between a Kane and a Leo? Have you ever seen either of us in a room together? I thought not. If only someone had an indicator. If only someone had an SMT indicator. Yeah. The production have never asked me and Leo to be in the same room either. It'd feel weird emailing the same person twice. No, I'm kidding. Ian. Leo, you long off this low? I know you are. I know you are. You are too. Good shit. Makes sense. How do I get into this? That's the real question. Hourly low. 15 low? No, 15 low. So realistically, the only way I would ever get into that is if we would have got an entry like here-ish. Never replayed. 3 minute never played. That's it. I would not be in this trade. I couldn't be in this trade. You missed it. Fuck. I didn't take any trades today. I am not trading today. This trade is going to today. I'm bearish up here, and I think that they're just going to run it into the highs for me. Ultimately, I would like to long this, right? This is where I would like to long, if I could long right now. But this is what the area that I'd want to long from. And I'd want to long up to these 800s. See if it gets in. If it gets in, I'll treat it like I was going to manage my trade. Where's my VWAP? Fuck. Shit. That's why we haven't made any money today. Oh, anchored VWAP rejection from the open. What about RTH? Jeez, look at that. Flip, support, push, resistance, flip, support. Not looking good. Yes, flipping. Oh, they're both under. I would still take this if this happened. There's no reason for me not to. Hourly low, 4 hour low. Yeah. This is a very good area to long. 691 for me, or for the model. And basically longing this back up to at least these all-time highs. And I'd probably get a bit greedy and go for like 2.5R. Because then that gives ES enough room. But no entry right now, so I'd currently be sitting on my hands. Have I configured Sierra yet? No one is deleting my comments. Why? What did you say? More trading? Oh, you said the more trading. Yeah, the production team probably think that you would tilt me, and they deleted it for my own sanity. It's fine, production. Jay Bear is a nice guy. At least I think so. Your target is all-time lows. It's not low enough at that point, honestly. Zero is too high. Definitely not. It's fine. I could tell everyone that you work at Rain, Jay, and to DM you about any Rain queries. That would be fun. Not for me, not for you, but definitely for me. No, Jay's a nice guy. When I'm in profits, what do I see? I like to say like I'm in a short here. So I was in a short up here and I have my target lower, the hourly low. So if I'm in a short at 9, 8 o'clock here, this is break even. Yeah, I mean, look, it is what it is. I just know today that I would just get crucified today. So I just said today and tomorrow, sit on my hands, let NFP show me where the market wants to go, and then I will get back in the market. I don't need to survive. I don't need to get through this week. I could just sit on the sidelines and watch it. This would be nice. I just really want this 6K ES. Go through, trap everyone, hold it up, put point of control up here, bang. Delta flip, get like some like yearly VWAP or like century VWAP up here. Delta flip, Delta star, and then just sell 20, very tight like stop, and target all-time lows. Leo, what do you think? Yes, no? It's going to zero. XY. If that happened though, you would short it, right? You would. Based on what I just said, that's bearish as heck. Come on, tell me the truth. Come on. Just say yes. He's right. He's right. Yeah. The millennial VWAP on fucking ES. This is the Gen Z VWAP. We're Clio. I'll take Clio. Right, are we gonna get NQ longs potentially? Can I show you my overall trade stats for last month? No, because no, I'm just not doing that right now. It's not looking good. The number is quite high in the red because I didn't trade last month. But if you watched my YouTube video, you would have known that. But you didn't, so you don't deserve it. How's my family feel about my support, my trading? Yeah, they're cool with it. Oh, bro, by the way, Pluto, sorry. The VWAP stuff is like a running joke. I don't actually use VWAPs. Sorry to upset all the order flow traders that I'm now insulting. Um, yeah, I'm order flow curious. I would love to use VWAPs a little bit more. I just don't actually know how they work. But I know how they work. I just don't use them in confirmation of my model. If 11 or 12 a.m. candle sweeps 9 a.m., is it for you the same quality if the 10 a.m. takes? No, because 10 taking 9 is I don't know. I come up with some really fancy term for it in the trade market, I'm sure. But it's just the direct candle after 9 o'clock. So it's basically trading into the low that set the high of the low of the previous candle. We should see some support there. The thing is, though, at least Merit showed 1 day's worth of stats. Listen, I have no obligation to show anyone anything other than turn up to the live stream. Who are you? The tax man? Jesus. If you want to look at my stats, go on my Instagram. There's a plenty of photos on my Instagram of my stats. Okay. Jeez. If you have any questions around how much money I make or don't make, yeah, don't get defensive, brother. You asked, I said no. You come up with a reason as to why I should do it. I told you to sod off, and now you're telling me I'm defensive. You're just rude. There you go. Yeah, that's fine. Anyway, production, can we just ban sod? Because apparently this guy's an arsehole to everyone. There you go. See you later, sod. No worries. Anyway, you can all buy Leo's order flow VWAP course for the high price of $10. Now, I really like the order flow guys. They're just fun, right? And Leo's just good soul. No, don't ban Jordan. Bloody heck. Let's torment Kane today. That's not. The price action is already tormenting me enough. There we go. Sticking around the open. One thing to note though, ES now back above the opening range, and Q below it. This is typically something I look to avoid. When one is below and one is above, that is a bad sign. Like, what do? You long ES and get crushed if NQ rejects. You short NQ, and ES takes off. Then what? It's hard. Also, yeah, it's not nice, especially at its key level, both being the opening range. Oh, sorry, France, no worries. Dodgy's making more money than me right now. Yeah, okay, that's fair enough. She, look, guys, it takes nothing to be nice. And yeah, I think there should just be the standard of being nice. If you ask something in a nice manner and get told no, and then persistently keep asking, it's just rude at that point. You know? ES is stronger, yeah. The OR is the 30-second. ES is come on, ES. Take the 6K level. That's what we want to see. The harsh part is this trade played out um on ES, which is really horrible to see. I would be annoyed if I was trading NQ today because ES took off. Now ES was weaker here, NQ was stronger here, and now it's the other way. Sellers are really probably getting crushed here, I imagine. Come on, buyers. Don't come off the pedal. Come on. Just push it. Take it to 6K. Show the market what you're capable of doing. Oh, boring. Boring. My day chart for a second. Yeah, I can show you it. I have no idea what this level is. Apologies. I probably drew that in when I was explaining something. This is my daily chart. Pushed up, rebalance, pushed up, rebalance, pushed up. We either engage at Tuesday's low and we rebalance and we then play the longs. I'm just waiting for the next rebalance. Pushed up, rebalance, this rebalanced in here. So this is overall delivered. The harsh part about this is that we didn't deliver from here to here. If you ignore this gap up and say that it rebalanced with this low, then the whole leg has been rebalanced. However, we're yet to rebalance for potentially pushing higher. Any trade today? There is no trades for me today. There won't be a single one. Do I have a private chef? I do not. Thanks, Hunter, bro. Appreciate the love. The next trade I take, my stop loss will instantly get hit. I know you're a real fan. Don't ban him, chat. Hunter's a real fan.
Hey, Kane. Sorry to sneak up on
Hey.
you. just really
Saw you coming.
just quickly want to go through crude oil inventories. Crude oil came in at minus 4.304 million. Expected was minus 2.900 million. So that is bullish for this market. Distillate stocks came in plus 4.230 million. Expected was 2.2 million. So that is bearish for that. For USLD, which is HO, gasoline inventories came in at plus 5.219 million, expected plus 1.500 million. So that is bearish also for gasoline inventories, and Cushing plus 576 million, more or less, doesn't mean anything. And in a second. And so at 436.1 million barrels, U.S. crude inventories are about 7% below the 5-year average for this time of year. Motor gasoline inventories are about 1% below the 5-year average for this time of year. And distillate inventories are still about 16% below the 5-year average for this time of year. So overall, kind of a mixed report.
Oil hated it, or at least scale did. Didn't come out nice.
Yeah, I was seeing not surprising with the product builds that high. But
I promise
that is
soon enough
all.
we'll trade commodities. We'll turn it into commodities Wednesdays. Promise, we will. At one point we will.
I like it. All right, let's do it. Right?
All right.
I like
All
it.
right, we will.
All
Commodities
right.
plus a bit of
Catch
NQ.
you later.
Have a good one, Tracy.
All right.
We're doing a whole lot of nothing, chat. Yeah, sorry, I'm getting well out of shot. My bad, guys. I was relaxing a bit too much. The price action was sending me to sleep. Come on, 6K and 6K ES. It's gonna blast through. It's gonna just take it. Big wick on CL. Did it just buy it all back? No. Sitting in NQ longs waiting for 6K ES. Is that you, XY? This was a great long down here. At 21,666. Crazy. 21,666.5. Have I ever looked at DAX? I'm a strict NQ trader. Maybe, just maybe, I will diversify soon because Jesus, price action is insane. So order flow, guys, tell me, are they selling this out of 6K like preemptively at like 599.8 or what? Tell me, help me out, give me some insight. Paul, I saw the question. You think 6K gets breached? I saw it, don't worry. What not made me consider this? There's no 15-minute wick below where? I would need this candle to print below this one to trade a 30-second. Oh, you're good. You think 6K? You think they just blast through 6K? Yeah. Yeah, but I'm more intrigued as to why they didn't tag 6K and then go 450 sitting at 6K, 250 at 599.75. We're not going anywhere because I have VWAP up. Damn. Let me get the VWAPs up. You know why we're not going anywhere? True story. Who knows the reason? Who knows the reason? We're only on 479 likes, and it's not above 500. The more likes we get, the more likely we are to hit 6K. I'm at over 30. How would you need me to be voltage? Tell me. We are just in a range right now, guys. That's all we're in. And I'm expecting it to do nothing for most of the day. Just asking you. I'm in my 30s, yeah. I don't normally give out my actual age, but yeah. I'm in my 30s. Some people know. Oh. Kane's 21. In my 30s equals 39. Yeah. We need hair secrets. Boys, I've just got. I mean, it's just my hair's all right. I mean, it's a bit messy today because I've got hat hair, but yeah, 31 for sure. Damn, I'll take 31. It's good. What did I put? What did I put in what? Yeah, I also watched my risk management video back the other day. That was 2 years ago. Shit, the glow up's insane. Crazy what money can do. No, I'm kidding. I'm kidding. I just started taking care of myself. Where did I shop all my clothes? Right here. This place. Interesting. They don't want to see 6K yesterday, do they? Stop it. Bait everyone into shorts. Run them, then send. I don't know. Wouldn't be in this anymore. Can I have my Chrome Hearts necklace? No. I went into Chrome Hearts Sunday. I wanted a gold pendant. You will not believe how much they charge for the gold ones. It's crazy, honestly. I was so shocked. 5 grand, more like 35. I was stunned. By the way, it's not worth 35 grand, that's for sure. Like, it's crazy amount of money that is. I'm kind of glad I'm not really doing much, chat. Anyone getting any trades? Damn, where's the risk management video from 2 years ago? Not a plug, but it's inside of my community. That's the truth. It's just in there. It's a private video in there. Jordan's in my community. Do I like the shorts? I don't, to be honest, JB, because I actually want to see 6K hit to the upside. Took the long off the lows. What's the most expensive stupid thing that I own that's not worth the money at all? Uh, Probably my stupidly expensive garden furniture. We get like 5 days of summer in the UK. I have a very, very nice gardens like set like that I just can never use because it's just always wet. No, I don't. I don't have a watch. Actually, I'm wearing a WAP and nothing else. I would buy the Stowe trading cards. The weather has been lovely lately, but like I spent a lot of money on them for no reason, right? Well, not for no reason. They're nice, but do I get to use them as much as I'd like? No. But even now it's cold. I wouldn't go sit outside, you know? I dropped out. I'm going to be honest. I dropped out. I dropped out of college. I actually never went to university. They're going to absolutely drop this through the opening range again. Looking like. Leo, if they drop this, if they close this through the VWAP, are you selling? Are you selling the RTH VWAPs? I know you like the VWAP. No. Kane shows to become Simp Central. Don't join my Discord, bro. All they do is make AI photos of me and come back in and send it. Tattoos of fire. Thank you. I appreciate that. I got all my tattoos done in a 6 month period. Yeah. I mean, wearing an expensive watch in London is just a waste of time. All you're gonna do is get harassed, mugged, or killed. And that sounds extreme, but I quite literally know people that have had watches stolen from them at knife point, which is crazy, you know. And then at that point, I've got all that money tied up in a watch that I can't ever do. Did I see that crazy 110K course on Twitter? Yeah, who do you think bought it? It was me. How tall am I? I'm 196 and a half centimeters, to be precise. Who has 110K and needs the course? A lot of people. I mean, some people, I know a lot of people that, run successful businesses but aren't good traders. I'm not moving to Dubai. No. It's just boring. I like my friends and family too much. Saw a video recently of a rich guy with a fake Rolex. The two guys killed him for it. Yeah, he had a fake Patek, didn't he? I saw that. It's crazy. I'm not married. No, I'm not married. Where's the girl in the chat that keeps trying to ask me on a date? She gave up. Damn. Damn. She gave up, chat. Australia's tough, right? Because it's just tough. Uh, I think I would add again here, in all honesty. I think this is like that I would add because I would just see this range, and if I get to trade here, I would just add this. That's not a go. We're getting emotional. What's my favorite US city? Vegas, I think. Can you take me out to sketch London? Sounds like you're taking me somewhere to get robbed. Do you want to marry? Good add, delta positive. Yeah, I think this is a nice area to add to. You're basically just playing this on the potential breakout. Add. I'd probably I would get into this and then I would add to that. So if I was already in it for whatever reason, I would have added here. And it's kind of the only time I would add. And then after that, I would want to see some sort of acceptance above trail. Closure above here would have me under the opening range. And then above here, just have me out. We'll see how this plays. We only have like 15 minutes left to the stream. Apologies for the very boring stream. I'm not going to force this, you know. What's the monthly insurance on my G-Wagon? I paid for my G-Wagon outright, the insurance outright, for the year. And if you guess, I will tell you, I will just say, if you take one guess, I'll say higher or lower. Fuel cost is like £150 every 3 days, 2 days at a push. £875. You think it's £875 for the year? Okay, Jordan. Let's put it like this. I'll say it this. Voltage and JD higher, Jordan lower. There you go. This gives you a nice, pretty much like in the middle. It was 12K. Basically thousand pounds a month, roughly ish. It's a little bit more. That's it for the car insurance. That's crazy, bro. That's insane. How much is that in US dollars? 12K USD, 12K GBP to USD. It's like 16 and a half K, 16.3. You pay 1.2K on a 100K car. Yeah, my car was $300,000. It's a bit different. Anyway, it's not about boys and girls. It's not about the luxuries of these things, right? Like I'm in a fortunate enough position to afford it, but it's just a car. Like the kit is a lot. It's definitely not cheap, that's for sure. They're just really front running this. My favorite food, bro, pasta all day long. Not even close. Order flow is very bearish. Yeah. I would like to add down in these below 700. You have zero insurance? Oh, pasta. If someone said to me I could only eat pizza or pasta for the rest of my life, it would be pasta. Brunettes or blondes? Yeah, I don't really mind. I've dated both. Two girls. Tall or short guys? Tall. No, sorry, short kings. Have you ever been to Wales? Yeah. What type of pasta? There's only one type of pasta that you should eat for the rest of your life. It would be the vodka penne from Carbone. Oh, the spicy ragatoni. Oh, that stuff's so good, boys. That stuff is like that stuff is so good. Honestly, it's so good. I used to be a carbonara guy, but trust me, after you have the spicy ragatoni from Carbone, it's crazy. I'm in my 30s and still haven't got a madam on my side. You're making it out like I don't. That's not by choice. Been speaking about food for 3 minutes. Carbone. Oh, spicy rig is undefeated. Honestly, spicy rigatoni is just something else, boys and girls. It's good. You can make it at home really, really easy. Oh, might have that for dinner tonight. Thanks. Guys, this is getting personal. Questions getting pretty personal. I'm just gonna stop. And just stop. Definitely, I'm not gonna answer that one. I'm just gonna stop answering the questions like this. I'm single by choice. I've I'm not desperate to get married. I do probably want kids at some point. Again, not desperate for kids right now. And what happens, happens. I'm not chasing it. I'm married to the game. You know what I'm saying? Got goals, and what will happen will happen. We get married. JD went through a divorce. One leg or one arm? One arm. If I'm not, I would. Kenshin, I'd support Chelsea. My family support Chelsea. My friends support Chelsea. Yeah. Oh, you want abstinence right now? Yeah, I'm devoting myself to God. That's a joke, but it's definitely not a dig at anyone that does that, just to be clear. Fave curry dish. Oh, tell you what though, the curry near me, they do a mean, and I mean mean carbonara. Bali's too far, and I don't really like the food, like the Asian cuisine. So Bali vacation for me sounds pretty bad. Okay, so what we've noticed is from the open today, all we've done is go up, down, and now we're back to where we were at 11 o'clock. So for me, in my journal today, I'm gonna write skipped trading day, went nowhere, good job. That's all it. Oh. VWAP's flat. Yeah. Any one advice I would give to an 18-year-old trader, your goal is to try and make it by 30. Don't try and make it by 21. Remember, it's a marathon, not a sprint. Yeah, Raja, they're looking at the bid and ask and the volume trading on the contract on the order flow side. I don't trade that, so they're yeah. Make it. You need to be able to, at that point, what does make it look like for you? Like, let's put it like this. To a couple of my friends, 10 grand a month, by every definition of their life right now, 10 grand a month would change their life. I know that they would feel made that much. If I just said, "Hey, come work for me, I'll pay you 10 grand a month," they'd be like, "I've made it." I also have friends that would be like 20K a month is probably where it is. So for me, it's like you just want to, in the next 10 years, if you're 19, have a level that you want to aim for, and by 30, aim to have hit that. 1% of people earn 10K a month in the UK. Sure, it's less than that. I'm even sure of that. But I'm also not sitting here. Um, would I go to this F1? No, probably not. Silverstone's boring, isn't it? If I do go, it'll be last minute. Luckily I live pretty close, at least like flying distance close, right? I could just go 20 minutes down the road, jump in a helicopter and get to Silverstone in half hour. Exactly, but in a way your goal is $50 a day. Yeah, that's fine. I think that's acceptable. But $50 a day for 200 days of the year is 50 grand a year. Probably more, no? Jump in a helicopter. I mean, bro, have you ever gone to Silverstone via car? Jesus, nothing will give you a headache like that. Do I know any country of Africa? South Africa. I went there in January. Azad, good job, brother. Good job. Oh, Londoners, like it's full of baby boomers, right? So most of them just inherit a house from their parents that they live in. 1K a month in London is pretty much poverty, yeah, which is so sad to say that out loud. Like it's horrific to say that. Ethan, you're basically just trading the 15-minute breakout. So basically, you're waiting for price to determine where it wants to go for the day. And if it breaks above that area, you get long. If it breaks below, you get short. Yeah. Why a G-Wagon? I'm 6'5", bro. I don't fit in most supercars. And the supercars I do fit in are crazy expensive. And if you've ever been anywhere in like the UK countryside, which is where I live, you will know the roads are not made for for supercars. Boggiest, appreciate you, brother. More than welcome. I would come back to South Africa. It's beautiful there. Porsche GTT Turbo. I do still have my RSQ3. Just sit on the back seat of a Punto. Yeah. I don't know. Tempting to get a 911 GT3 RS, right? Or 992 would be even nicer, actually, I think. The G-Wagon is just nice, guys. Betting on a third outside day. Personally, I would, yeah. Guys, so I would say 1% a day is very aggressive. You know, it's crazy, crazy. In fact, what about the days when if you're aiming for 1% a day and you're down 2%, then what? McLaren Senna, yeah. Guys, I'm just not a massive car guy. I quite literally bought the G-Wagon because I like the look of it. The Brabus body kit on it's mean. It's 4x4, it's fast, but it drinks fuel, right? That's the truth. So yeah. AM sessions been patched. Yeah, we did nothing all day. What a surprise, eh? NFP on Friday. There's not really much to say, chat. Hope everyone is safe all week though. And we will, we'll just take it slow. Dream car is chauffeur driving it. That's exactly what we want. What's my Instagram? It's just Trader Kane. I would recommend not trading until after NFP now, yeah, personally. But you're all going to do what you want to do, but that's just it. I'm not going to trade for the rest of the week. Nope, I won't trade till Friday morning now. And I won't trade Friday, so I won't trade till Tuesday. But, so yeah, boring for you, boring for me. I know, right, chat? Fast exotic cars are uncomfortable and impractical. Yeah, they are. But look, you got to scratch the itch. Gentlemen, how are we?
Pretty good, man. Pretty good, Kane. Jason, how you doing?
Good, good. How are you?
Pretty good. Kane, I love the comment about the journal.
Yeah. Skip the day, positive day for me. Got what I wanted. Wanted to avoid this and kind of avoided it. Would have been pulling my hair out so far.
Yeah, I mean, most people aren't writing in a journal. I think it's a great thing.
Yeah. Yeah. Jim, did you change your background? It looks darker there.
You know, Tracy said that too. I have a blue shirt on, but it makes everything look darker, I think. So I'm gonna have to rethink my wardrobe, I think.
Yeah, you're floating right now. Just ahead, you know?
Yeah, I need a lighter shirt like Jason's, and then I'll be looking good on screen.
Yeah. No, it's true. Right, gentlemen, I'll leave you to it. I'm sure you've got loads to talk about. I've got a sore throat, so I'm gonna go lay down. Appreciate
Appreciate
you.
appreciate you too, Kane. Thanks. Have a great weekend.
Cheers, guys. Bye.
All right, we are ready for Jason Shapiro Crowded Market Report. Jason, how have you been?
Good, thank you. How are you?
Is that a tie-dye shirt?
My stepdaughter made this for me for my birthday. It
Yeah, I
says
love it.
it says greatest stepdad ever.
Oh, there you go.
And she did the tie-dye job too.
Well, someone's got to be the greatest, so I'm glad it's you.
At least in her eyes, which is all that counts.
Oh man. Well, we've had some kind of, I don't know. This is I want to start talking about the equity market. It's just the behavior's been a little bit interesting to me. I know there's a lot of the news cycle is a little bit on the wild side with tariffs and with the big beautiful bill and all the other stuff going on right now. But just this stretch to 6,000 in the E-mini S&P has been, I'll be honest with you, surprising to me.
think it's surprising the most. I think that's the name of the game, though, isn't it? The market usually surprises, doesn't it?
Yeah, well, I get surprised more than others probably,
I mean,
but
you can't, you know, one of the most important tenets is you can't fight the tape. What has the tape said? All we've gotten is bad news, and all the market does is go up.
yeah,
So, you know, market tone is a very important aspect of any kind of trading, I think. And to this point, the market tone's been very good. You know, the weekend was all bad news. Market went up on Monday. Yesterday was some bad news. Market went up on Tuesday. Today is not done yet, so I'm not going to conclude what it did today. But to this point, the economic news that came out today was nothing but poor.
yeah,
So, and to this point, the market's up. So, you know, that's the tape speaking very loudly to me. You know, I think it's a function of, I talked about this a couple months ago, that clearly we had front running in the last quarter and early part of this year, people front running tariffs that we knew would then slow down in the second quarter, which is exactly what's happened. But the market to this point has seen through that as to,
yeah.
okay, things are slowing down now, but if they're going to have to rebuild inventories again, then, you know, next quarter is probably going to be better again, right? We don't know the tariff thing and all that mess, but I think the market is looking through that to this point. But again, it's all about not fighting the tape.
Yeah. Well, I mean, today again, we're I don't know, a couple of points away from that 6,000 on the E-mini S&P. You know, the commitment of traders report it seems like it's still in like this contraction mode where you know, everything's hovering close to zero. There's no you know, maybe we had a little bit of a push up on the non-reportables, but not much, not really.
No, there's no certain crowdedness at this point. But you know, you can look down towards the lows where there was, right? Back, you know, that looks like back in yeah, right there, right?
Yeah.
And if you were to be buying it back then you would just be sitting on it here until things flip the other way. They haven't flipped the other way. We're in sort of, you know, trend mode at this point, and the trend, at least to this point, is higher, you know. Clearly 6,000 is a number that people are looking at. You know, the market likes to get this roundophobia type of thing a lot. Um, I actually used to, my first job in this business was I was a futures broker on the floor in Hong Kong, and my big client was Trout. And that was a huge trade of theirs that they used to do all the time. Whenever we used to get to these round numbers, they would buy the crap out of it, approaching the round number, and then they'd put resting sells right at the round number. And the guy who used to say, the market just wants to see it print. They want to see it print.
Yeah.
So he would, like, you know, be buying it, let's call it, you know, 5,900. And then he'd have these resting orders to sell at 6,000, and the market would print it and he'd be out. So there's a lot of that goes on. But I think the more important number, which is a little bit higher than 6,000, was that last Wednesday night number when we had sort of a freak out buy overnight.
Hmm.
I think there were some trap longs that got caught in that. So those have to be worked out. But I don't know. Until the market says otherwise, it's going higher.
Yeah, I just toggled to a daily chart. These are daily candles on the E-mini S&P, and you know, I'm looking for patterns all the time, and a lot of times these patterns don't do anything, but sometimes they do. So, you know, the infamous ascending triangle right now is on my radar, but
Yeah,
you
it's
know,
pretty clear.
we've been here for a while. I mean, we've, you know, early May, we've been at the same level, and you know, we failed, right? The buyers couldn't do it, sellers took over. We're trying for a second time. I don't know if that's a double top or triple top or what. This wick was the wild wick you're talking about. I think we wicked up
Yeah.
to 60.07. So we're challenging that right now.
Yeah, I just don't condone. I very rarely condone being short, once in a while, but I really don't condone short here, which doesn't mean the market can't go down. But you know, it's just trading. It's just trading too well on the back of bad news. You know, it
Yeah.
can't go down on bad news. Then you know, what's it going to go down on? Usually good news, because we'll get good news and people will pile in, and then you know, then they'll get too long, and then you know, like we had on that wick on Wednesday. But
Yeah. Well, right. I mean, we saw that intraday on ADP comes out, and it was a pretty big miss on ADP this morning, and everything went crazy. I was thinking, oh, okay, this is bad news, but now the Fed's going to cut rates, and we're all happy again.
Yeah, I don't. I'm not. I don't know exactly what everybody's thinking, but to me, it's not. It's not really the Fed cutting rates thing. It's just a. I think people got caught way too short in April.
Yeah.
Portfolio managers got caught way too underweight, and now they are being forced to chase back. And once they chase back, and once they get done chasing back, hopefully that will show up in the COT data as well. And then we can talk about trying to short, give it to them. We want to be market makers. When everybody's looking to sell, we want to be buying. When everybody's looking to buy, we want to be selling. That's a very general idea of it, right?
Yeah. Well, on this on this chart, the large specs have been slightly negative, and not a huge negative, but slightly negative since with one pop in October 2024, and that was really it.
Yeah.
So
Yeah, this has been one of the most hated bull markets that I think any of us have ever seen.
yeah, I agree with that. So last week, I think we talked about either the ultra bonds or the ultra notes. I know I just want to pull up the ultra notes here really quickly because we did have a lot of movement, relatively big movement here in the COT,
Yeah.
and not a lot of movement in price.
Yeah. You're getting some movement in price now, but certainly people have gotten pretty damn short fixed income.
Yeah.
And now we're starting to see, fixed income levitate a little bit, right? They've just gotten, I think, a little bit too short. This whole macro trade has gotten very crowded. The dollar bond macro side of things has gotten a little bit overdone, I think.
So would you say we're getting close to crowded here on this histogram bar?
I mean, certainly on that one we are, right?
Yeah.
To argue that we're not, right?
Yeah. Yeah. So for those of you who are kind of new to Crowded Market Report, Jason Shapiro, and our segment on Wednesdays, this bottom panel is tracking the CFTC commitment to trader data. It comes out weekly, and actually, I should have a weekly chart instead of a monthly chart. Probably, I'm going to toggle to that. And the orange bar, I guess red bar, orange bar, that shows the commercial positions, net positions that they reported. And then the blue is the large speculators. That's their net position. They're usually inverse. And then that little yellow one, that's the non-reporting folks. So the smaller folks that are most likely speculating too. Is that right for the yellow?
Yes.
All right, let's see if I change this to a weekly, if I freak my charts out. No, I didn't. All right, there we go. Much better, much better. All right, well, we'll see what happens here in this. We'll keep our eyes on this as well as we're moving forward here. I don't know. This bottom here is the bottom, right? This is the bottom in on this part of the yield curve or not? That's a 109 handle. We haven't seen that since the beginning of the year. Certainly, we've challenged it twice, but never really got back below into that 110 handle even. So it seems like it's kind of holding its own as we
It's
speak.
an interesting analysis of the COT stuff where you saw so much selling the last few weeks, right?
Yeah.
And you never got to new lows.
Yeah.
So it's like all that selling couldn't bring us back to lows.
Yeah. So would you interpret that then as saying this is a stronger market than it appears?
That's how I would interpret it, yes.
Yeah. No, I like that. I agree. We'll see what happens. I mean, I was on the floor back in I don't know, 79, 80, 81. I can't remember. But, inflation and interest rates were all the rage back then. And, we had 30 years trading. There was no ultra bonds, right? The 30 years were trading at a discount, right? Less than 100. And, I want to say we even had a 78 handle for a while. I was a kid, so I didn't know what that meant. But, when folks approach me and say, well, I can't go any lower, Jim. I'm like, well, yeah, it could.
Yeah. It can always do something. People ask me all the time, could this happen? I'm like, anything could happen. If I've learned anything in 35 years of doing this, it's that anything can happen.
Right. Exactly. All right, so let's kind of move. Let's move another market that I caught my eye, and this is one that we don't talk about a lot, but I just want to throw it up anyway. This is heating oil, or it's also known as ultra low sulfur diesel. Delivered at New York, and it's what powers most of the transportation for commerce here. Well, everywhere for that matter. But we did see some movement in at least the non-reporting. Less. It's getting less and less positive, and the commercials have kind of flipped negative.
Yeah, it's a it's a no trade there for me. There's no any kind of real thing there. You saw that there was getting crowded back
Yeah.
in December, and we had a rally, and very quickly that crowd and it got taken out. So then there's no edge anymore. And then it started, you could see the blue guys started getting short again a few weeks ago, and there was a rebound, but they got out of those shorts very quickly. So, we never know how fast these people are going to move. Sometimes it takes a couple weeks like this, and it becomes a quick trade. Sometimes they will sit on their shorts for a long time while the market rallies, and it becomes a longer term trade. I've had trades last a couple weeks. And I've had trades actually last, I think the longest trade I ever had was 18 months, where people were super short something. I got long and they never got out of those shorts for 18 months. And I rode that thing for 18 months.
Wow.
It's pretty atypical. Usually it's 2 or 3 month trades is a typical trade for this type of stuff. But you just never know. A, you never know what the market's going to do, obviously. And B, you never know how these people are going to react. I've had quants build models to try and figure out, where these things are going to go, where these speculators are going to move based on changes in price and open interest and all that. And the accuracy has been scattered at best at being able to predict what they're going to do given price and open interest changes.
So, out of curiosity, so you're in a position for 18 months, and you're not getting stopped out. So, in my mind, anyway, you're holding your own. I'm thinking you might be right here. At any point, would you say, "All right, it's time for me to add on to this position"?
I don't add. That's not how I trade.
Okay.
I don't do that. I put my risk on the day that I get my market confirmation. I size it to the stop, risking a fixed amount of my portfolio to the stop, and then I just go. I'm such a poor trader that if I were to add, that would just ensure that the market would go against me and it would turn a gain into a loss.
That would be the one trade that flips the market, Jason's add-on.
I mean, aren't we all guilty of that? I'm just as guilty as anybody else.
No, I know. I've seen the same phenomenon. I was like, "Oh, it's time to get long," and sure enough, then the market moves against me.
Yeah. So in particular, when I add, so I purposely developed my process so that I wouldn't fall victim to those things that we
Yeah.
all sort of fall victim to. Doesn't mean I don't have losing trades, but I don't have what I would consider a stupid losing trade.
Yeah. Yeah, you make your trade, have your stop in, do your risk management, and let it go. And what happens, happens.
That's it.
Yeah. All right, all right. The other one I wanted to have you take a look at was platinum. Again, this isn't probably a common day trading market, but I did see some crowded potential here.
It's
With
getting there.
yeah, large specs are bumping up their game here a little bit. Net long 20 over 25,000 right now.
It's getting there. I mean, they've chased, they finally have come in and chased. Platinum's gone from 900 to almost 1100. And so now they're chasing. So they're not to the point yet where I want to short, but they're getting there. I hope they keep going up and I hope they keep getting long and it will give me a nice trade, but hopefully. But at this point, you got to just sit back and let them go, let them go.
So okay, so I'm going. When does this get crowded? So I'm going back to November here, where clearly it was, and we did get that turnaround, right? That not only that, the next month we even added positions and it's still sold off
Right,
for 3 weeks in a row.
right.
Is this? Do you use that kind of idea? Like, all right, I want to draw a trend line. I want to see. I want to get to this positive 35,000 level, or is it unique to each candle?
What I do is I am taking this data and I'm indexing it over, let's
Oh,
say, a
that's right.
year.
Yeah.
So I need it to be at, like, for example, if I'm looking to get short, I need those commercials to be in the 95 percentile of how short they've been over that indexed period.
Okay. Is it
So,
an annual index period or a longer term?
each sector is a little bit different, but it varies between sort of 9 months and 15 months kind of thing.
Got it. Okay. All right. So we'll keep our eye on platinum. I know Tracy's happy now that we're talking about commodities, as she is the expert and telling us why this stuff does it. But in any event, any other markets on your radar screen that you want me to pull up? Other other than the Bitcoin. For some reason, I'm not getting that COT data for the Bitcoin.
There haven't been very many changes over the last couple of weeks from the markets we've been talking about. Um, the currency, really, the big one is the yen. That continues to be the most crowded thing there. Um, as you can see there, right?
Yeah, let's take a peek.
Um, hasn't done very much to help the short yen trade, but it has certainly stopped, at least for now, the trend in its tracks, right? Which is, what I talk about a lot. You don't have to use this stuff to trade like I do. In fact, I don't encourage that. I think you can use this stuff to trade like you do. And if you are a trend follower, example, this could have at the very least highlighted the fact that maybe the trend is a little bit exhausted here and you can get out or you can reduce or you could do whatever, right? Um, the risk reward certainly has shifted, right? You see where the yen was in January, and you see where it is now. When nobody's long in January, right? To me, that's a lot different than now when a lot of people are long, you know?
Yeah.
Doesn't mean that the yen can't keep going up. No, it doesn't mean that. But it means the risk reward has certainly shifted.
Yeah. So, Jason, Trader Sam in the chat asks, which one do you pay attention to? The commercials? Question mark.
All three.
Okay.
All three. In the perfect world, I like to see the commercials if I'm going to short something. Super short and both the large and small speculators, super long. I will, on occasion, ignore the small speculators if they are such a small part of the open interest anyway, which you can see they are in this yen, right? Look at the yellow bar relative to the blue and the red, right?
Yeah. Yeah.
If I get a great confirmation and the small speculators maybe are not necessarily totally the longest they've ever been, I would take that anyway, but I wouldn't ignore any the large specs or the commercials. So those definitely have to be in place for me to put a trade on.
Yeah, and the small specs or the non-reporting, who are these? Who are these traders? Is it just folks with big accounts that are holding positions?
Well, the small specs are the opposite, right? The large specs, the blue guys are big money managers, CTAs and whatnot that have to report. All it is they're reportables and non-reportables. They have to report their positions when they get too big because the CFTC is trying to, not allow people to corner a market. That's how that all came about, right? So everybody else who isn't trading that kind of size is a non-reportable. You, me, whoever, right? Most people out there, most retail traders out there will fit in that category.
Right. So you take the open interest, you subtract the reportables, the commercials, and the large specs, and then whatever's left over is everybody else.
Pretty much, yeah.
Yeah. All right. All right. Well, I do want to check the euro though, because I'm still planning, Jason, I'm still planning this Sicily trip in September. And I want to I got to convert some US dollars here. I need to time this a little bit better.
I mean, first of all, I don't know when the last time you went to Europe was. Um, I, but the game now is you don't convert currencies. You just take your credit card and that's what everybody takes everywhere. I was just in Italy for 2 weeks. I didn't use cash once. So that'd be my first piece of advice. Don't the cash game, is such a ripoff. The spreads are so big. As a trader in particular, it'll piss you off. I literally, when I was in Ireland last year, was in the airport looking to exchange cash, and I was pulling up quotes on my phone and saying to the lady, "How can you possibly be changing money to me at this number when I'm looking at what the price is right here? Like, you got to be freaking kidding me. And I refused. I refused to take, it was like a 6% hit. I'm gonna, like, I'm sorry.
Yeah.
I'm too cheap to do that. I worked too hard for my money to hand it. So I never converted any cash, and I went around Ireland also just using credit card. So
Yeah.
that'd be my first thing. As far as timing it, I mean, look, they're certainly getting long euro here, right?
Yeah.
They're not at max levels yet. Let's not forget that this isn't going to give you the perfect timing all the time, every time. When it works great. There are plenty of times it doesn't work, but certainly they're getting there. They're getting to crowded levels in that area. You know, I think that the question here, that's an important question that I won't have the answer necessarily to, but in particular when you're talking about buying dollar, right? Getting long dollar, getting short euro. You can look at the futures market and say, okay, people are massively crowded short dollar in the futures market. But we know damn well that the world is not short dollars. Okay. The world is naturally very long dollars, right? So this stuff tends to work a little bit better. Not that we haven't had good trades buying dollars, we have, and shorting some of these currencies, we have. But it tends over time to work better the other way, when they get too long dollars.
Hmm.
We get some really good shorts. And that was the case. You can flip through all these currencies and look back in January when American exceptionalism and the dollar was all on the cover of the Economist,
Yeah.
right? And every one of these currencies was showing that everybody was mega short these things, right? And you could have caught any of them. I'm talking about the euro, the Swiss, the New Zealand, the Aussie, the British pound. They were all lined up that way back in the beginning of January.
Yeah, so just looking at this though, real quickly, we have, the yellow, the non-reportable, and then the large specs. They're, I don't know, I'm gonna estimate it at about, I don't know, 75% of the height. So it seems like the non-reportables are also pretty long here. Does that difference, that relationship between the large specs and the non-reporting matter? I mean, you just said you want to see them both big, right?
Yes, I want to see them both above the 95% level on my index, which
Got it.
they're not there yet.
Yeah,
The only thing that's really gotten there is the yen.
yeah.
And
Um,
clearly it's a lot better if you get a lot of them there, right? If you get a whole bunch of correlated markets all crowded,
mhm.
and I would argue it increases the risk reward of the trade, which, like I say, was the case back in January on these currencies.
Yeah. No, that makes sense. By the way, I had the same experience you did. I was in Brazil of all places. And at the airport, I had some real in my pocket still. And I thought, okay, I'm just going to go, I'm waiting for my flight. I was there early. So I went to exchange the money and I did the same math. I mean, they gave me the rate and I'm thinking about what the real rate, what the real rate should be. And it was crazy, but I only had like a couple $100 and I'm thinking, all right, I'm going to take a 10% haircut, but am I really going to, is it worth it or not having to go to the bank to try to get something a little bit better when I get home? So I just did it.
And did you get something better?
No, I did it
I
I
just
decided
flipped
not
it.
to
Yeah,
waste
no,
my
you're
time
not
at
going
the
to get
bank.
anything better. The banks here are even worse.
Yeah. But the credit cards will also, they'll also convert, right? Don't they?
Yeah, the credit cards convert at a pretty decent rate. I found that the best rate was the ATM machines.
Huh.
That's what I found. And
Yeah,
trust me, I
I'm
tell you,
ter
I'm
yeah,
I'm super cheap about this stuff. So,
yeah, yeah, I'm always paranoid they're going to clone my card. So I never, overseas, I never, never do it.
no, look, always good to be paranoid
I am.
when it comes to your money.
Oh my God. Anyway, all right, we have a few minutes left here. Let's just take a peek really quickly at the NASDAQ just to see if it's any different. Probably not. And then we'll shoot over to the Russell. Here's another one, right? Super strong. Maybe not, maybe not crowded by your definition on the large specs either.
No, not crowded yet. Working its way towards, but certainly not there. Which doesn't mean the market's going to go,
Yeah.
it just means there's no crowdedness there. So there's nothing to sort of stop it, so to speak, either way, you
Yeah.
know.
So I do, when you see divergence though between the large specs and the non-reporting, one's positive, one's negative, does that
Yeah.
give us any sense of anything going on?
I mean, it gives you a sense of discussion. That would be about it. I mean, I think that the interesting thing here is when the market bottomed in April, these specs sold into the rally. You can see that, right? Both
Yeah.
small and large specs have sold
Yeah.
into the rally. This
Yeah.
is something that I have noticed has been happening in a bunch of different markets, a lot more in the last few years, for whatever reason. We're seeing a lot of this selling into rally. Usually we get buying into rallies, right?
Yeah.
But we're seeing selling into rallies, and not just in stocks, across a bunch of this has been a huge Bitcoin thing. That's caught some really nice Bitcoin trades.
Yeah.
When they first had the rally, sort of just before the election, specs were selling into it, and then the thing ripped from like 70 to 110, and then they got out of their shorts. And in this last rally, when it rallied sort of up to 85, 86, we saw speculators selling into the Bitcoin rally at 86 as well. And then we rallied from 80, and all they've done is sell more into it to this point, right? So, rallied from 86 to whatever, back to 106. And we're seeing speculators continue to sell into that. So it's like, to me, I would stay long that until we see that it just gives the potential for a short capitulation, right?
Yeah.
They've shorted into the rally, they've shorted into the rally. Well, at some point, hopefully they will get squeezed out of that, and that will show up here. When they get squeezed out, we'll see the positioning change, right? But there's, again, doesn't always work, but there's huge potential there for that to happen right now in a bunch of these things, like this one, right? Where they're selling into the rally on NASDAQ.
Yeah. All right. Well, we'll keep an eye on that for the next report on Friday. We got a couple minutes left. Let's talk. I don't have a Bitcoin chart up right now, but let's talk about Bitcoin. I mean, what's your general feeling of what's going on there? The more and more I read about it, the more and more it seems to me that this thing is here to stay.
I don't think that I'm the person to comment on that because my knowledge of Bitcoin is no better than, I haven't read the white paper. I can barely use a computer. I am not the person for that, right? I have a bias as being a cynic to be one of the people that, this is a scam and, MSTR is a Ponzi scheme and that whole thing. I like to have that conversation. But the truth is, I don't trade off, just like I don't trade off of macro stuff in the markets, right? Um, I trade off of positioning and market action, right? And the positioning and the market action are very favorable for both Bitcoin and the other big one, whatever it's called, Ethereum.
Yeah, Ether,
Positioning
ETH.
and the market action are both very favorable for that stuff right now. So I may think Bitcoin is a scam and I may think it's going to zero and yada, 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 but I ain't going to short it when everybody's short and it's going up and it's basically on highs. Like that's not something that I do. You know what I
Yeah.
mean? Because I prefer to not lose my money, you know.
Yeah. Yeah.
Um, I,
All
I
right.
I don't need
Yeah.
to make a stand, because the market will make you pay for making stands.
That is fair enough. Jason, I appreciate you, Jason. Jason, Crowded Market Report. You could find him on X. I'll cut and paste that in a minute. And then if you just kind of search Crowded Market Report, right? I think are you on YouTube also?
Yes, a lot of stuff on YouTube, a lot of free stuff on YouTube.
All right, all right. We have the X in the chat right now, folks. So follow Jason. Jason, appreciate you. Looking forward to talking again next Wednesday.
All right, man. Have a good week.
All right, you too. Thanks. All right, all right. Joining me live after a long hiatus, Dave Keller, CMT. Dave, how are you?
I'm good, Jim. I think I'm going to take the other side of Jason's Bitcoin trade, but that was awesome to hear the end of your conversation together this morning.
Yeah, no, I love talking to Jason. He's got
Yeah.
he's got some insights. He looks for crowded markets and then flips it. So
No, it's beautiful. And in hearing someone like him, I realize how much I underappreciate the commitment of traders data. It makes me feel like I should be paying way more attention than I am. It's not part of my normal toolkit, but I thought some of his takeaways were spot on.
Yeah, no, me too. I know. I'm in the same boat. I try to look at it now every Sunday night before I do my Sunday night prep, right? Just
There we go.
mentally. So, by the way, on X, I was in your what do you call it when you're hosting like a seminar? It was a Spaces maybe. I don't know what it was.
Spaces, yeah.
Yeah, I was there. I was in there yesterday, the day before. I don't know. All these days are blending together, but it was awesome. I mean, it was you really did a really good job of recapping everything.
Thank you. Yeah, it's so I do a daily market recap, and it's obviously very technically oriented given my background, but
Yeah.
focusing on improving your, sort of situational awareness as a trader, as an investor. I think one of the biggest mistakes people make is just not being aware of what's moving and how it's moving and just benefiting from the information that's embedded in price action. So
Yeah.
hopefully our conversation today sort of follows through on that, I would hope.
Yeah, no, for sure. I'm going to pull up some charts in a minute, and we could talk about technical analysis stuff. And by the way, folks, Dave is a CMT chartered market technician, I believe it's referred to as.
That's right.
It's not a difficult. It's a very difficult thing to attain. Remember, we had Tom Schneider with us also, and Tom's still with us, but he was also a CMT. So I've learned a lot from Tom and from you as well, Dave.
Yeah, it's something an experience I'm glad is in my past. It's in the rearview mirror and not going forward. That was an experience to get through all the exams and stuff. But what you're forced to do is learn all about the technical toolkit. You come out of it, I think, a more informed investor, a more aware trader. I think that's a good thing.
Yeah, I mean, the last test I took was my Series 3 about 25 years ago, I
That
passed.
I was gonna say the biggest challenge is getting back in the mindset of taking an exam. That's not easy if you have some years under your belt, but
I just
worth doing for sure.
I just remembered I passed by one question, so that was it. I'm done. Oh man. Any event. All right, so let's take a look at some markets. Let's start with I'm going to pull up a micro Nasdaq only because I
Sure.
think the data is a little better than the regular Nasdaq and the futures
Yeah.
chart. Right here, this is just a daily candle. I don't have a lot of, I don't have a lot of stuff on it. I've just been tracking the 8 EMA, 21 EMA, 50 EMA, and I could add anything you want to it. And I have some stochastics at the bottom, and that's it. But
Yeah.
we just keep trying to make new highs here, but not forcefully.
I think that is a great sentence to describe the market right about now, Jim. I think that's totally fair. I mean, by my read, if you think about the Nasdaq, if you think about the S&P, there was a kind of a certain vibe coming off of the April low that really went into mid-May,
Mhm.
which is an acceleration higher driven by a lot of growth. We had the big gap higher on a lot of the ETFs, sort of early May when the tariffs with Europe were delayed, and so you had that big gap higher. But then mid-May to now early June, the market stalled out, and so it's not really it hasn't really been going down. It just hasn't been going up as much. And we've also seen a lot of leadership rotation too, right? So some of the growth stocks all sort of hit pause. Stocks like Meta, Nvidia, not going down, but kind of not going up as much. Now this week, we're starting to see kind of a reinitiation of that upswing. We've seen Meta break out, Nvidia break out, other semiconductors starting to improve. So it's all of a sudden markets have gone back to sort of the old way of thinking, which is kind of growth over value, offense over defense. And I think there are plenty of risks to this market. I mean, I could list out 10 headlines we could get tomorrow that will tank the market very quickly. But for now, the price action is telling you long and strong. There are things to be excited about. Things like the jobs data this morning just make me question the sustainability of the gains. But the price is what's most important. Price is going up.
Yeah, no, it's almost like even bad news can't thwart this thing.
Right? And it's so funny if you think about it. Last week we had Nvidia's earnings, which were arguably incredibly good earnings,
Yeah.
and the stock went up a little bit, but not much, right? And by the
Yeah.
end of the week, it was kind of right back where it started. So we had this sense for like 2 weeks. Okay, the market's not going up when it should. Now, all of a sudden, arguably, the market should not be going up, and it is. So it continues to be a head scratcher of a fascinating market environment in 2025. But for me, particularly in an environment where one headline can completely change the dynamics of the markets, as we've seen many times,
Mhm.
I think you have to go back to like the foundational principles of what it means to trade, of what it means to analyze the markets. And I think this is where you focus on price, right? If people are nervous or excited or desperate or optimistic, the price action is going to reflect that. And I think what we're seeing so far this week is more optimism. And I'm kind of thinking of this market as innocent until proven guilty. I think there are plenty of technical signals we could observe that would tell us this is no longer kind of a bullish phase. But for now, certainly on the tactical time frame, it's a strong tape.
Yeah, I mean, a couple of lines I've drawn up there. One of them was, I was kind of like, we closed yesterday, and I was kind of like, all right, when's the last time we had a body of a candle, at this level? And I kind of drew the line all the way back, just kind of look, and
Yeah,
we're talking February 21st, so a long time ago.
yeah,
Yeah, yeah, and then the next line I drew is that all-time high wick. I'm using a continuous chart here for the
yep.
futures as another. And what happened? And I see this. I'm like, oh, there's a possible zone here we could spend some time in.
For sure, and again, I think I sort of think of it in two ways, right? Number one is you define the trend. What's sort of the prevailing kind of what I call the primary trend? Like, what's the general sense of what this market is doing? And then the second part are what are the key levels you want to pay attention to, and what are we doing now relative to where we've been? And I think when I evaluate it with that very kind of systematic, objective approach, the trend is positive because we're now making new highs again, right? We're sort of finally emerging from that sort of consolidation phase we've been in the last couple of weeks. Is there a lot of overhead resistance, what I call a supply zone? Yeah, for sure, right? Going back to those all-time highs. I mean, is there a scenario where the market just plows through those previous highs and keeps going? That is a possibility. Is that a likely scenario? I don't think it is. Because of that overhead resistance, and a lot of individual stocks are nearing pretty key resistance areas as well. So I think the challenge right now is the risk versus reward. I don't know how great it is, particularly above those previous highs. As a trade, though, I'm seeing an upswing for sure.
Yeah, it makes sense. Well, let's switch gears here. Let's go. I've been tracking the 30-year Treasury bonds also,
Yeah,
and let me pull this. I know you were talking about tilt and some other stuff on your show
yeah.
the other day. I thought we were gonna. All right, let me just zoom in here and get your opinion on this thing because I thought for sure, starting these previous 3 days, we were going to have this was a bearish reversal pattern, and then
Yeah.
all of a sudden today,
Yeah. One day makes a difference, right?
yeah,
Yeah. I mean it's very interesting. I think if you're trying, particularly if you think about intermarket analysis and try to think about stocks versus bonds versus the dollar versus gold, I think this is going to be a very frustrating period because those kind of traditional relationships are not really matching up very, very well. We're seeing here where bonds are pushing higher, stocks are trending higher, so we're sort of getting both of those starting to rally a little bit. So they're all related. I think those relationships are pretty fluid right about now because there are a lot of things driving it, right? And I think the dollar. I think interest rates are driven a lot right now about how the Treasury auctions have gone, which is not particularly good. But also just how much non-U.S. investors are rotating into U.S. Debt. I think I heard the end of Jason Shapiro's comments on that. I don't know if I would agree with all of that. I think part of it is I think there's a big question mark in terms of the sustainability of the dollar's leading role. And I think the charts are reflecting that, right? The dollar's been pretty weak in 2025. So with all of that being said, from a purely technical perspective, bonds are starting to bounce on here over a sort of a long-term time frame. I would say that if you look at bond futures, opposite if you look at yields, yields are pulling back to support. In this case, we're seeing bonds rallying up to a trend line. If you draw a trend line off of the previous highs, we're kind of getting near to the upper end of a channel. So I don't know how much further we're going to get a big rally in bonds. But I would say that's how you want to generally think about it is look at the short term, the tactical trade versus some of the long term trends. And I think we may be getting a counter trend rally here in bonds.
Yeah, it surprised me this morning, and it happened right at that ADP number. The ADP number hit, and boom, we just
Popped up.
relayed a handle.
Yeah. Yeah. So I mean the entire, the general sense of what interest rates are telling us, I think is kind of confusing now. There are times when it makes a ton of sense. I don't know if this is one of those times just because of, again, all the headlines that are floating around, all the tariff decisions, the equity markets in particular, and trying to think way forward about what companies are going to be able to earn. Bond markets are trying to price forward about what this means for economic growth. Bonds are rallying today, and rates are coming down. And when that's happening, I would say at this point in the cycle, it suggests kind of a lack of optimism. That makes sense a bit to me, I guess, given the jobs number. But again, from a technical perspective, I think you keep it. I think you keep it pretty straightforward. I think we might be trading up to a resistance here.
Um, yeah, I mean, I threw a fib line in just to help me think about where we're at
Mm,
right now. But now that we're so strong over that 21 EMA, and I'm looking at, but the stochastics aren't cooperating yet. We'll see if they
yeah,
do. I don't know. But going back to your comment about correlation, I was tracking the correlation between the 30-year bonds and the S&P, E-mini S&P,
yeah,
and I was shocked this year, this calendar year, to see just such a wild difference. Sometimes, this was way up to positively correlated, which is against the textbook. And
yes.
then it switched all the way back down to almost perfectly negatively correlated, then in the middle. It's been a wild ride on that correlation between those two instruments.
And arguably, you're finding that with a lot of kind of traditional intermarket relationships. You find that with like stocks and gold to a degree, right? Where they're moving together and then they're not.
Yeah.
There is I think if you think too oversimplistically about, bonds are a safe haven. So if stocks are working, bonds should not be working. I think you're going to get into trouble. And that's when again, the reasons why some of these relationships are fluid usually make a ton of sense down the road. Looking back, you can understand what might have been happening. I would encourage people to keep a pure kind of technical perspective on some of these charts. Think less about what something like gold or bonds should be doing based on the cycle or the environment. Focus on what they're actually doing. That is what I learned from the CMT. That's what you're taught, is to focus on price action
Yeah.
and then think about the reasoning and the justification for why moves could be. That's going to make sense later probably, but for now, follow the trends, and when the trends are working, the trends are working.
Yeah, so I just toggled over to gold, by the way. And I thought we had some pretty good resistance here, approximately, I don't know, 3360-ish, give or take a couple points. I like to draw rectangles to kind of help my brain assimilate where support and resistance levels are.
Sure.
And, boom, we crushed it, right? We had a breakthrough. We broke up to the outside.
Yeah.
I marked that midpoint of that candle just in case to see what happened. And we wicked to it yesterday, but we closed above that midpoint right now. We have an inside bar here. What is this looking like technically, this chart?
No, a number of things that you just said, Jim, I absolutely love. I think that's a great way to approach this. I love the idea of drawing a rectangle around the price action, and you've seen that with a number of charts recently. Really helps sort of show how the market's been in equilibrium. And those are in some ways some of the easiest trades I think you make, which is looking for markets where buyers and sellers are in agreement and then something's new, right? And so I think that breakout that we saw, that was on Monday,
Yep.
is significant, right? That tells you something's different, right? We're now emerging out of this consolidation zone. Buyers are in control. And I think using the midpoint is a brilliant way of just thinking on the tactical time frame. Are we holding that breakout? I always look when you have a move like this, it is so easy to get whipsawed, right? Where you have a big move higher and then you immediately give that back. And so if you use candle charts, which it certainly looks like you do, and I think about all the time, you're looking for like a negative candle pattern, like a bearish engulfing pattern or a dark cloud cover pattern, not to go too deep into the readings, but things that would show you there's distribution. In this case, we're kind of holding the midpoint of that breakout day, which I think is pretty encouraging. So overall, I mean, gold I mean, over the longer term, is certainly still in a primary uptrend, pretty constructive technical configuration. I think in the short term, you're starting to see a retest of the previous highs. And I don't own gold. I don't trade futures directly, but I do own the GLD and the IAU, which is kind of making this bet right now.
Got it. Those are ETFs.
Yeah, ETFs owning physical gold. Yeah.
Oh, okay.
Mhm.
Gotcha. All right. So they're backed by physical gold.
Yeah, so there are, I mean, when you're looking at ETFs, there are ETFs that own gold stocks. There are ETFs that kind of try to get exposure to gold through some exotic structure, which you probably want to avoid. And then I'm a fan of things like GLD, which actually own physical gold. So if you're trading futures, this is probably a much better option. But for equity investors, that gives you an opportunity to get into physical gold without, having a bunch of gold in your house, I guess.
Yeah, there's a famous video floating around of John Carter. I don't know if you know John. He
Yeah.
he was he had this dolly and he had all these stacks of like silver bars and gold bars. And he's like, I don't know why I bought these things. I'm taking them back. I'm taking them back to the dealer. I'm just going to go in the futures market and buy some contracts.
I mean, it seems easier to me, but it's up to you, I guess, right?
Yeah. Anyway, all right. Well, speaking of silver though, because silver was interesting too.
Yeah,
We had a long consolidation period here, and this is only
yeah,
like I don't know, a buck and a half, maybe $2. And
yeah.
I'll shrink this up a little bit so it looks more cooler than it is. But really, I mean, all the moving averages, they're just going straight across, and then again,
Yes.
boom, Monday, huge breakout.
Yep. Yep. And I would say the shape of the moving averages is often very telling, right? So if you have the moving averages flat, you can see like in the middle of your chart, it's just the definition of a market in equilibrium, right? The moving averages are flat. We're kind of trading around them. So this is just normal market noise around sort of the level we kind of all agree on. And then when you start to see the moving averages fan out a bit, and then eventually we get that breakout on Monday, that tells you something's new, something's different, right? There's a catalyst
Yeah,
that's pushing us into a new regime,
yeah.
and I think that's pretty encouraging. So between the two, I think one of the things to think about is if you would somehow plot the ratio of silver versus gold, it's very much been favoring gold over silver for a while, right? If you look at the two of them, and gold's kind of been trading higher while silver's been more consolidating for a little while. So I think there's a bit of a mean reversion happening where silver's kind of they've both been good,
Mhm.
but gold's just been better. And I think there's an opportunity for a catch-up trade here as well. So I wouldn't be surprised if silver starts to outperform gold here going into June.
And what's the silver ETA called?
SLV is the most common one, the
Got it.
ETF. Yeah, same idea owns physical silver.
Yep, yep,
Mhm.
yep. All right, cool. Well, while we're on the metals, let's just shoot over to Dr. Copper.
Yeah. I mean, so and again, all of these are I would say fairly constructive charts. You can see a big difference, hopefully from a technical perspective, on what we talked about with gold and silver,
Yep.
sort of already breaking above resistance. Copper's a little more range bound still, right? And I'm drawing the same levels you are, Jim. I think that's spot on. This is one of those that's kind of still in a consolidation phase. We're starting to see some higher lows over the last week, which is encouraging. But Monday's candle, I think, was pretty telling, right? Because you trade right up to the previous resistance. I like charts where we don't trade to resistance, we trade through resistance and we break out and they get some follow through. We've not seen that on copper. So thinking of the relative meaning of some of these technical setups, I would say the gold and the silver charts much more constructive in that they've broken above resistance. You can see buyers outweighing sellers in terms of the price action. I think copper still has a little more to prove, and I would want to see it get above those highs from I think that's from April, end of April, right there.
Yep.
Yeah.
Yep.
I think that's the area I would be looking for. For us to finally break above there, I think would be pretty significant. We're still sort of stalling out at the peaks we had from the end of May right now. So it's sort of a market in transition, still in an equilibrium. I'd love to see improved momentum, improved price action before I'd be a believer in copper here.
Okay, so two things. One, now I've recently kind of adopted stochastics on a daily chart. I mean, I've
Yeah,
tried it all. I've tried MACD, RSI, what you name it. I've tried it over the years, and now I'm in
yeah,
my just this is regular slow stochastic mode. But I'm starting to dig it, and
yeah.
I'm looking for these crosses that tend to happen between the 80 and 20, not above the 80 or not below the 20.
Yeah.
How do you feel about this? I know it's a lagging indicator, but it sometimes helps out a little bit.
So there are kind of three ways to think about stochastics. I guess three things you're looking for. One would be the extremes, right? So sort of like on the
Yeah.
left, about a third of the way through the chart, right? We're way above the overbought condition and we cross over. Or further to the left where we're oversold and then cross up. That's kind of the classic buy or sell signal, which tells you it's sort of a mean reversion trade, right? We've been in a big upswing. it's changing and we're reverting back to the lower end. So I think that's one way to think of it. The second would be divergences. I don't see a lot of them here, but when the price action and the indicator do something different, and the indicator is usually a better tell in terms of the prevailing sentiment. Because what happens is toward the end of a move, you'll see the price continue, but you'll see the indicators start to rotate lower. It doesn't always happen, but that's a second thing I would look for. The third thing would be some of those secondary buy and sell signals. What I would say you're sort of asking about, which is those little crossovers that happen that are not like big, huge shifts, but more just telling you the sort of tactical time frame and when there's a rotation. I don't think that's a bad thing at all. And the way I would think of it. And I think Jason said something about the market will make you pay for taking stands or something like that. I think if you're in a position that disagrees with the signal that you're seeing on stochastics like that, it just tells you at this moment you're on the wrong side of things. And so it's a great kind of gut check. I think that's great for risk management to say, look, if I'm trading against one of those signals, I'm now fighting the tape here. And I've learned that's usually not a good place to be, and at least be aware of that and make sure you have your risk clearly defined. But those are the three things I would look for. I think what you're talking about right there is not bad at all, and that kind of helps to catch those sort of shorter term moves within the trend. Not bad at all.
Okay, so we're looking for overbought, oversold, and divergence. Now, sometimes, I think we'd see this in the ES probably or the NASI. You'll see overbought conditions for a long period of time.
Yeah, so that's one of the common issues people have with indicators like this. You assume that when it becomes overbought, all right, I should be shorting it, right? I should be selling into strength. And if there's one thing you will find if you look at any kind of growth name, I mean, just coming off like the April low, but go back to like 2024, and you will find plenty of times where things become overbought and stay overbought. I always tell people overbought means up a lot, right? It just means we've gone up a ton. And in certain market environments, trends can persist way longer than you think. So fighting that is usually not a great idea. So generally, you want to look for when things exit the overbought condition, right? Becoming overbought just means we're in a pretty good uptrend. Coming out of the overbought condition tells you something's different. The opposite, right? We become oversold. That tells you we're going down a ton. And you can find stocks that are not as common, but you can find things that are in pretty good downtrends, like in energy or something like that. But when it no longer is overbought, that's when it tells you something's different. That's when it tells you, that downtrend is exhausted and maybe we're starting to turn a little bit. So that's kind of the more the way I would think about it. So, and that's where divergences kind of play on that as well, right? Because you start to see things rallying, but they're no longer overbought. That's when it can be a warning sign that maybe we're near the end of a move. So certainly, I think that's more the way I would think of an indicator like RSI or stochastics or any of those kind of similar techniques.
Totally makes sense. All right, one more question, one more technical analysis question on this chart.
Yeah, for sure.
So I'm gonna get a free lesson. We have an 8 EMA, a 21 EMA, and a 50 EMA, right? And so when I'm looking at this, I'm saying, okay, so the faster moving average, the one that tracks less data, it's gaining separation between the slower ones.
Yes.
Right. And that, in my mind, I'm going to think, well, okay, so there's upward momentum because of that.
Yep. No, totally fair. And so I would say a couple things on that. The moving averages you're using are great. I love the fact that you're using exponential moving averages. I mean, most people use simple moving averages, and they're valuable because so many people look at them. So looking at the 200-day simple moving average, if you look at the S&P, we keep hitting it. I don't think that's a surprise because so many people, even investors that are not big chart investors, still know where the 200-day simple moving average is. We just do. So I think there's value in just having an awareness of what that is. But if you're really trying to understand the trend and how it's shifting, exponential moving averages are much better because they're more sensitive. So they're more weighted to the most recent data point. So when things turn, the exponential moving averages are always going to turn more quickly just because of how they're calculated. So I think that's a great approach, number one. Number two, what you're talking about, I would say when you're thinking about moving averages, a couple things you can look at. The slope of the moving averages is, I think, an undervalued data point. So thinking about, is the 21-day EMA sloping upwards? Is it sloping downwards? Generally being on the side of a market where the 21-day moving average is sloping upwards, you're going to be on the right side of the trend. And, being long something where the 21-day is trending downwards, again, you're on the wrong side of the trend at that particular moment. So probably not where you want to be, or at least be aware of that. So I think that's part of it, sort of what I call the shape of the moving average or the slope of the moving average. The second one is using multiple moving averages, looking at the shape of the three, the configuration. And I always look for things what I call the moving averages proper order. You have three moving averages: short term, medium term, and long term. Is the short term above the medium term above the long term? If so, that's a good uptrend. If the opposite is happening, we're in a good downtrend. I actually run a regular scan for stocks and ETFs where the moving averages are in the proper order. And that's just to know, do I generally own things that are in primary uptrends? Good. Do I generally not own things, or am I short things that are in a downtrend? And again, there may be a good reason I have to fight that, but I better be aware that that's a trade that I'm making right now. And in terms of the moving averages, you're selecting the particular data points, right? 5-day, 8-day. Those might be really good, Jim, for you and how you're approaching it. I think for different traders, for different timeframes, you're a swing trader versus a day trader versus a position trader. The moving averages periods, the periods you should use should probably be very different. So finding that combination that's going to help you understand the trends that you're trying to play is what's most important. But I think what the way you described it, I think is pretty fair, and you can see the shape with those moving averages on the E-minis here. It looks like.
I'll be honest with you. I mean, I use the 8, 21, and 50 because Mike Arnold told me they were good, and I'm easily influenced.
Jim, I've worked with a lot of traders over many, many years, and with people with lots of zeros on their accounts and people with very small. Everyone has an answer like that. It was someone that sat on anyone who's institutional. The guy on the desk gave me a point and figure book, and that's why they become big point figure. Like it just that is how it works. And listen, you were pointed in the right direction. I think that's not a bad combination.
Yeah. Well, anyway, it's muscle memory too, right? The longer you're looking at them, the longer
Yeah.
you see the relationship between them and price, then
Yes.
you start seeing things in the tea leaves kind of thing.
And I would say that to your point, I think that's absolutely right, Jim. I always tell people a consistent but imperfect process is better than an inconsistent perfect process, right? So if you come up with the world's most ideal moving average combination, but you don't apply them consistently, you're not really going to get the benefit of it, even if it's not the perfect setup. But as long as you just keep doing it consistently, you're going to generally understand. You're either going to have success with that, or you're going to identify when it's not helping you, and you can start to adapt. But consistency with any of these approaches is what's so important. So I look at the same charts every morning, and there's a reason for that, right? It's not just sporadic when I feel like it. It's every morning I look at the same charts, and that's why.
Yeah. No, I'm with you on that. Did we look at bonds yet? Trader Sam says, can you talk about bonds a little bit? Quite a breakout today. I'll pull it back up. I know I can't remember if I was talking with you or with
Yeah,
Jason.
we looked at the 30-year early on in the conversation. That was one of the first charts we looked at.
Yeah, so we did talk about this, Trader Sam. Yeah, there's a breakout. It's a big breakout. Didn't like the data today, and there's probably some unplanned news going on from Capitol Hill that we don't even know about.
The headline will become obvious another time. Yeah, I think, and again, if you look at the futures and draw a trend line off the highs, if you look at the yields and draw a trend line off the lows, we're kind of right at the lower end of that. And today we may actually be breaking through those trend lines. That's something I'm looking at here.
So is this how am I doing on my trend line here?
It's not bad. I mean, right? Ideally, I mean, so there are a number of trend lines you could draw on there. That's not a bad one. I would also draw a trend line off of that first peak that you did, and then maybe, let's see. Yeah, there we go. Some of the secondary peaks in there, right? So that
Yeah.
was the initial trend line break that you saw, sort of,
Yeah.
end of May. We started to break above that initial one. Now, any trend line you draw now, it appears like we're trying to break above it with the futures today.
Yeah.
So I think if we close around those levels, that's a pretty compelling rotation, and that means stronger bonds, weaker rates. And that doesn't imply optimism at this particular moment, I would say, in terms of economic growth and good things happening. That's a little bit of pessimism, I think, showing today.
Well, Tom Schneider introduced me to speed lines also. So
Yeah, that's what we were kind of getting at. We're kind of getting toward that, right? Just looking at different slopes and looking at when they start to break. See, you talk the talk pretty well, Jim. I'm impressed. That's good.
well, Tom taught me good for 2 years. So anyway, so all right, I do want to mention, do you do that spaces every day, or is that
Yeah, so I do a market recap show every trading day, 5 p.m. Eastern, 2 p.m. Pacific, and we live stream that on YouTube, X, Facebook, and LinkedIn. Yeah.
I highly recommend it. I mean, I know you show charts and you talk at the same time. I was literally walking on the beach when I was listening, and but your commentary was good, was so good that I could envision the chart. You know what I mean? It was
Yeah.
really, yeah, and you cover a lot of ground. So I recommend everybody, if you're on X, I think we cut, yeah, we did X, D Keller CMT. You could probably Google you and find you all over the place too.
Yeah, for sure. My YouTube channel is called Market Misbehavior. So yeah, feel free to check out my work either of those places.
Awesome, man. Well, David, I really appreciate you spending time with me today on NinjaTrader Live. Looking forward to talking to you again.
No, for sure, Jim. It was a pleasure. Thanks so much.
All right, everybody. We are going to wrap up the morning session. Appreciate everybody being part of this awesome community. Remember, high tides lift all boats. I learned that down here in Charleston, but I also learned it in the chat. You guys are awesome. Thank you for being with us today. We're going to be back at 2:30. Me and Shai are going to hit it with a hot commodities report right away at 2:30. Then we're going to have order flow labs in the house. They're going to be trading the close. We have Nick for a tick and XYZ. So we'll see you at 2:30. Thanks for being here this morning. Appreciate it.